Pump it up, don't you know? Pump it up. You've got to pump it up, don't you know? Pump it up. You've got to pump it up, don't you know? Pump it up. You've got to pump it up, don't you know? Pump it up. You've got to pump it up, don't you know? Pump it up. You've got to pump it up, don't you know? Pump it up. You've got to pump it up, don't you know? Pump it up. You've got to pump it up, don't you know? Pump it up. You've got to pump it up, don't you know? Pump it up.
Woo! 100K. Here we go. Welcome back. True North, episode 9, MicroStrategy True North. Holy cow. This might be one of the first live streams right after 100K. That's crazy. What a way to start a Wednesday.
About to hit 102.
102. We are cruising. We might have to
we're
just
above
leave
102.
Yeah, we might just have to leave this live.
Oh yeah, we've been above for a few minutes now.
Oh shit! Coinbase is still at 995. All right, cool.
Okay, all right. They're playing hard to get.
Always. They're probably going to crash any minute now. Just for shits and giggles.
Let's go. Absolutely.
Those lights are awesome, Adrian. I don't know what they are. If I put lights on in my basement, that's the only acceptable version.
The Philips Hue. I had to do the green. For tonight. Just had to do it.
It looks like the night vision light. You know what I mean?
That's the exact hue I went for. No pun intended.
Night vision. Of course. All right. Welcome back, everybody. Here we go. We are
just
water. I mean, I've got whiskey because this is a celebration. I mean, we got over the 100K hump. I think MicroStrategy is going to absolutely rip tomorrow. We've got Bitcoin at 102,000. We've got MicroStrategy at $444 trading overnight, up 9.4%. And it looks like it's going to keep going. After a couple days of no volatility, it's funny. Ben and I were on a phone call this morning, and it looked back. If you look back in the last week, the price of MicroStrategy changed 1.3%. And I don't recall another week that we've had a 1% change in the price of MicroStrategy. I mean, for the past year. So kind of crazy. And here we go. All right. And many of you have noticed that we have Ryan is back right below me. Welcome back, Ryan. Okay. Ryan has graduated from Twitter, as many of you may have noticed, and he has now moved on to bigger and better things. As you may start to realize, many of us are pursuing many other avenues outside of MicroStrategy True North and just being, crazy guys talking on Twitter and YouTube. And we are pushing the envelope for Bitcoin treasury strategies and the development of the Bitcoin network moving forward into the future. So we have no shortage of things that we're working on. And I'm sure everybody that's in the chat and on the screen and that's been following us will see us start to do bigger and better things. And you'll start to see us at different points in different places. So I wanted to say a brief congratulations, Ryan. Congratulations from graduating from Twitter. And I know a lot of people have expressed that they've missed you. So, if you have any words to say to the community, the mic is yours.
Yeah, thank you for that, Jeff. And I definitely miss the people. You know what I mean? And it just became a thing where and we're going to talk about this more, but the human psychology of this whole experience for me and Jeff has been so easily predictable. No one was talking about MicroStrategy when it was $18 a share, and I felt like I had an amazing entry coming out of FTX. Nobody was talking about it. I was like, the software business is free. It's trading at less than its Bitcoin value. And the only people that responded back were just fellow curious researchers who weren't pretending that we knew everything. We were using the platform for what I think it should be, just open source thinking and learning from others. I think that's better than ChatGPT because you're working through it together with other like-minded people. But then, I mean, it just dissolved into a situation where it's just everyone and their mother is talking about this thing in such a perverse and like negative sense. Plus, I already got all the value that I'm going to get from that site. I use our group chat, like our internal group chat, as, you know, my social media. I just talk to the smartest people on the relevant topics, and they keep me in the loop with some things on Twitter. But yeah, so I've found like the group of people that I want to work with. And since there's just so much negativity, it was just for like an obsessive person like me, like if you're going to FUD my family's bags and then tell me that like I'm emotional, like so many people would do that. They'd say some really basic, simple-minded thing, and then in their first comment it would be like, wow, there's so many emotional people out here. It's like, enough. So I might not be gone forever, but I'm also doing what Jeff was alluding to in terms of you know, working in private equity for the sake of like buying Bitcoin. And I really shouldn't go into any more details yet, but when the time is right, I'll be happy to go off on that. But thanks, Jeff. Thanks, everyone.
Yeah, absolutely. And Ryan's going to continue being on the True North episode. So he's not gone. It's not like he's evaporated from Earth. Some people were, it was so funny. Some people, like the classic bears, were saying, oh, Ryan sold all of his MicroStrategy and he's disappeared off the planet. It's like, you guys are so wrong. You have no idea.
No, Ryan's just like Chick-fil-A. You can't get him on Sunday. That's all.
One last thing here. I'm working the phones, baby, non-stop, like traveling, like talking to people about MicroStrategy, talking to people about MicroStrategy options, like also doing like other things, but like working the phones. Just because I'm not on Twitter doesn't mean anything. And I think that's such a bad characterization that like I would just pick up and leave and like not tell anyone I sold my shares, or after doing all of that public research. Like, it's so wrong. It's so obviously wrong.
Yeah, and there's so many catalysts left on the horizon. It's just like it's so obvious. And I think that's a timely message to shift into. A lot of today's commentary is going to be about bears. We are going to be classifying bears today. We're going to be having some fun with it. And we're going to provide some structure for the community so we can start to leave these bears in the dust, because I think most of them are bullshit. So with that said, everything we say tonight, none of it is financial advice. They're just a couple of guys. MicroStrategy True North is this group, this super group community of investors that have come together. We would be having this conversation internally if nobody was there. So we figured we would just broadcast it regardless. So none of this is financial advice. We do not offer financial advice. There are many scammers out there that are trying to sell in investing classes and, you know, all this stuff. Nobody's doing that. So if you're in a Discord or Telegram where you think you're talking to me or Ben or Ryan or Mason or any of these guys, get out of it. Like, we're not in there. I don't have any time to do that. So sorry. And I think that's it. So without further ado, we'll get into a little bit of the agenda. We'll talk about statistics here for a minute. So we've got the price of Bitcoin is trading at about 103,000. It definitely appears like we've hit escape velocity, because I think it skipped 101. It already hit 103. And it's moving up and down very fast. We're like hundreds of dollars. Price discovery. We're back into price discovery.
I'm showing peak at 104 even is what it is.
104. Also, who's selling their Bitcoin at $104,000?
Pussies.
You're right. Like who has a sell order between 104 and $125,000? Like, at what point do we just start skipping $25,000 price points and start trading around, you know, 125,000? At
least we could accept the symbolism of selling at 210,000. Like, I'll acknowledge the symbolism there. If you wanted to sell a little bit just for the good feeling at exactly 210,000, but anywhere between now and then, you're just giving stuff away. Like 100K was the big mental barrier. The next big mental barriers are a ways off now.
Absolutely.
So if this stuff all starts coming to fruition here, this is going to get crazy fast, because these books are thin. I mean, you look at this price jumping around, there's nobody stepping in front of this train right now.
Yeah, well, like especially if you've bought Bitcoin and you see it pass 100,000, it's almost like thesis confirmed. Like people get hardened as opposed to letting go of their Bitcoin, which is crazy. And if they're following Michael Saylor or even what Trump said, don't sell your Bitcoin, right? People are likely not going to be selling their Bitcoin. The other thing I was going to say is, oh man, I forgot.
The disclaimer.
Disclaimer
Start with
again.
that.
Not
No, we
financial
did the
advice.
Disclaimer?
Yeah, we did the disclaimer, not financial advice. Yeah. That's all right. I'll come back to it.
Jeff, was it the Wall Street Journal article?
Oh, Wall Street Journal. That's exactly what I was going to say. Yeah. Good call, Mason. So, yeah, I was just on my phone getting ready for this show, and then I got a Wall Street Journal alert that said Bitcoin surpasses $100,000. And I just have the Wall Street Journal app on my phone just because I want to know what the TradFi guys are thinking about. It's not like I actually care about the Wall Street Journal. It's more of like, what do other people think they care about? And I use that as alpha. So all of these TradFi bros are going to see that Bitcoin has passed $100,000. They're either going to see it tonight or they're going to see it tomorrow morning when they open the Wall Street Journal app, and they're going to go, "Wait a minute, what? Bitcoin's at $100,000?" And all of a sudden, that mental nominal bias barrier has been broken, and that I think we're going to start to see people just start their Bitcoin journey now that Bitcoin has passed $100,000. So not only is the order book thin, we have likely a very large cohort of people that are going to start paying attention to what Bitcoin is. I am not going to be quiet tomorrow at work. I will tell you that. I will be, messaging all of my friends or my coworkers and colleagues about the price of Bitcoin. And we'll see how many text messages I get tomorrow too. So should be an interesting data point. Thanks, Mason. The other things I was going to talk about. So irresponsibly long MicroStrategy. I'm going to go back to sharing my screen. Irresponsibly long MicroStrategy has surpassed 20,000 members. Back in, what was this? Back in September, we were just below 4,000 members, and we were around 4,000 members for 4,000 to 5,000 members for, I don't know, 2 months. And then we kind of started on this little trajectory. And irresponsibly long MicroStrategy had a big jump just recently in the last couple of weeks. And we just surpassed 20,000 members. So again, a fresh reminder, r/Wall Street Bets, which was the community that people were following during the GameStop mania, r/Wall Street Bets went from 600,000 members to over 10 million members within a week. So there's significant mania potential still out there from using the irresponsibly long as a data point. There's still a significant room for potential growth and mania potential within the X community. What else was I going to talk about? The MicroStrategy Den. So the Discord. When it first started, I think I joined, there's around 200 people in there, and the Discord is now at 3,706 people. MicroStrategy rank in US publicly traded companies is now the top 100. It's the 100th largest US publicly traded equity. The market cap is around 90-something billion as of close today. If we continue to see the price of MicroStrategy rise tomorrow, it is going to break into the top 100. One notable point that I've been mentioning in my daily updates is that the daily traded volume for MicroStrategy over the last 3 weeks has been on average, the third largest publicly traded equity in the entire stock market over the last 3 weeks, which is an insane statistic for a company that's ranked 100th. I think it's pretty indicative of the interest in the stock and the potential for the stock in the future to be up there with the top publicly traded equities up in the top 10, top 15. Volume is usually a decent indicator. Okay. Anybody else have anything to add on statistics there before we get into our meat and potatoes of the presentation?
We're gonna work to have like a little data table that hopefully like just auto updates. And maybe that can be like a talking point for us in the future with like our in-house proprietary like analytics. Like I want to look at how much MSTR's implied volatility has changed week over week, or the volume, or just kind of those what we would consider to be like relevant analytics. So I'm going to work on that.
Yeah, our hope is to have continuous data points that people can access. I mean, as I've shown on the screen, there are multiple websites that are starting to track all of this data. I think this data is incredibly useful, tracking the irresponsibly long members, tracking market cap over time. The MSTR tracker, shout out Radu and Cole Tenold. They've absolutely been putting a ton of energy into that website, and they have tons of data available and different perspectives and that you could trade off of or think about or use in your journey. Additionally, Ben Workman passed 30,000 follows on Twitter. Congratulations, Ben. I think he's the
Congratulations.
first. Yeah, that's it.
It's a wild world we live in, guys. It's a wild world, but it was pretty cool. I mean, given like you guys were some of the first ones that I ever really talked to on here, right? Early on, back like last January, February, I think there was like 5 people talking about MicroStrategy, right? And we were well down the path. MicroStrategy had already been going on this, but there was nobody talking about it. And so I remember I started posting analysis, and all of a sudden everybody on earth was tagging Ryan in it just all the time. Basically probably trying to get him to come tear me apart, right? Which is probably what they were looking for, but he didn't, right? He just talked.
We're like, we
like
this guy.
Yeah. And then
His posts
eventually,
are long.
My launch point was being the very first guest on Quant Bros. I always say no one's going to be able to get that back. The only way for you guys to top that was to get Adam back on the next one, which that was something. But
I read Ben's post and I was like, wow, this guy's much smarter than me. I want to be friends with that guy. That was the process.
And here we are, right? I mean, how wild to think that we just found this random crew from across Twitter that just, you find all these people with all these really good ideas and you pull them all into a group. And, Jeff gets a ton of credit for that, for, trying to herd people like us into calls all the time. We're a nightmare for this guy to manage, but how cool, right? I mean, the ideas we get to share is amazing. The community we've got out here is absolutely amazing. And I always say it, and people are going to get sick of it, but this is like the only community I've seen online where like I get no hate. You expect people to just come in and be trolls and, do the normal internet thing. But the MicroStrategy community, like everyone who's ever pushed back on things, it's always been constructive. They're always adding something to the conversation. And a lot of times it's things I hadn't thought about or you guys hadn't thought about. Like there's a lot of people lurking out there that have a ton of experience and they're willing to share it, which is great, whether they do it in DMs if they don't want to be public or they do it publicly. But no one ever really, other than the Bears, and we'll talk about them later, but nobody ever really goes at each other. It's fun, right? We have a good time. So I did say in one of my posts last week that I'll be doing a giveaway for the 30,000, but there's a new condition to that, and that's that Jeff is within striking distance of 30,000. And if you guys get him over 30,000, then I'm going to pull money out of him as well. And we're going to increase the size of the giveaway here. So if you're not already following Jeff, go follow him. We'll get a post together here. We're going to be looking for people that the community thinks has been doing a really good job, putting good MicroStrategy content out there, supporting the community. So we're going to kind of leave it up to the community to find the people for us that we should be giving away these items. And these will be, sweatshirts, t-shirts, all kinds of stuff that we'll get from shops that are also supporting the MicroStrategy community. So it's going to be fun. We're going to enjoy doing it here. So start thinking about who's been making an impact out there. Nobody in the True North group. Sorry, guys, you guys are out. But you guys can go buy your own stuff because MicroStrategy is going to be way up. You'll be fine. But so keep it in mind. Keep an eye out for it. We're having a ton of fun. We're gonna keep going. Yeah. And if I get quiet later on, just know this is kind of my Jordan flu game right now. I can feel my my heartbeat in my eyes at the moment. I'm fighting off a headache. So if I start going dark on here, that's why.
That's the flu game. That's perfect. Yeah, and I'm at 29,900 something. So I'm a day away. I'm a day away, and then we'll add on to the giveaways, and we'll be giving away some True North merch. You may be one of the first people to get some True North merch, and it should be a lot of fun, and it'll all be free. There's no things involved. Okay, perfect. Shall we go to the meat and potatoes of the presentation? Is it time? Is it time we talk about financial leverage and then classifying the bears? Okay, let's do it. Okay, let me add us on the side here. Maybe we'll shift this around. Okay, so we are going to get into financial leverage and bear classification. So this is MSTR True North, December 4th, 2024. And this picture is a MSTR spaceman with a little tiny teddy bear. So we could, he's doing his analysis, his quant stuff. And yeah, we're gonna get into this. So first thing I wanted to talk about is financial leverage. And this is something that comes into play in many of the bear cases that people say about MicroStrategy. One of the common threads of the bears is that they're going to get wrecked, quote unquote. This is going to end poorly. They're super over leveraged. They don't know what they're doing. How is this working? And so I wanted to put some perspective on MicroStrategy's financial strength and why this is important. So what I've done here in each one of these columns is outline MicroStrategy's financial leverage over time. So starting at 12/31/23 and looking at different date vintages all the way to December 2nd, 2024. So this Monday. And you can see how the price of the Bitcoin held on balance sheet has increased from 189,150 at the end of 2023 to about 402,000 as of Monday. So they've more than doubled the Bitcoin that they've held on the balance sheet in the last year, and the Bitcoin price has also doubled. So the assets held on balance sheet at the end of 2023 was 8.3 billion. The assets held on balance sheet at December 2nd, 2024 is 38 billion. That's the number all the way over here. So what I've also shown here is MicroStrategy's total liabilities. So their total liabilities at the end of 2023 was 2.5 billion, and their total liabilities here as of December 2nd is 7.5 billion. So the liability to asset ratio. So what percentage of their assets are denominated by liabilities, or how much assets do they have relative to their liabilities? At the end of 2023, they had a liability to asset ratio of 31%. So this is just taking 2.5 billion divided by 8.3 billion. Now, as you can see over time, the liability to asset ratio has gone down. So they have 7.5 billion of liabilities and $38 billion of assets. So this is also known as like a leverage ratio. How leveraged are you? How leveraged is your balance sheet? And this is a good indicator to identify the total leverage of your balance sheet. Like how much assets do you have relative to your debt? And so Ben and I are frequently looking at this indicator because this gives us some perspective on when we may expect a future convertible debt offering to come out. If we think that the balance sheet is under leveraged, we may identify that there's opportunity to add more debt to the balance sheet to bring the leverage ratios back to average. The other thing I wanted to indicate here is going from 11/11/2024, the liability to asset ratio was 19%. Or actually, let's go end of Q3. So 9/30/2024. This is the end of Q3. MicroStrategy's leverage ratio is 30%. Okay. What do we know happened after the end of Q3? They announced the $42 billion capital plan, $21 billion of ATM, $21 billion of convertible debt that they would deploy over the next 3 years. What have we seen? They've deployed the ATM significantly faster than anybody had thought or imagined. And we've seen, I think, roughly 11 to 15 billion of that ATM used so far. So the really interesting component of this ATM, and a lot of the bears don't realize, is that when Saylor is selling shares at the market and buying Bitcoin and putting it on the balance sheet, that is permanent capital. That capital doesn't need to be repaid back. That's not debt. And that reduces the leverage ratio over time. So end of Q3, the leverage ratio was 30%, and moving forward into 11/11, the leverage ratio dropped to 19%, then down to 15%. This is using the ATM. The leverage ratio is dropping, and then what do we know happened in that week? Is they added another $3 billion of convertible debt. The leverage ratio bumped up to 21%. And as the price of Bitcoin continues to grow, that leverage ratio is dropping over time. So the more Bitcoin that they have on balance sheet that they raise via ATM, that drops their leverage ratio because that's permanent capital. It's not debt. The other thing I wanted to point out is that all of the convertible debt, all of the convertible bond offerings, is that none of the debt is secured. All of the debt, 100% of the debt is unsecured debt. That means there's no Bitcoin tied to any of the debt. So, if the assets fall below the liabilities, it's not like the debt holders get the Bitcoin. There's no Bitcoin tied to any of these debt covenants. Additionally, there are no EBITDA covenants that are tied to the debt. So the debt has nothing to do with how profitable the company is, or has no profitability metrics within the debt covenants. Now these next rows here, these are the as if Bitcoin price for assets less than liabilities. So this is a bit of a confusing row, but what this means is, what does the price of Bitcoin have to fall to in order for the assets held on balance sheet to be worth less than the liabilities? So I'm just going to jump all the way over here to this final column. As of December 2nd, the price of Bitcoin would need to fall to $18,826 in order for the assets on the balance sheet to be worth less than the liabilities. And this is just a metric to look at and I guess be aware of, right? I mean, if the price of Bitcoin went down to $18,800, I know everybody in this chat, everybody in True North, everybody on Twitter is going to be selling kidneys and testicles, figuring out how to buy as much Bitcoin as they possibly can, right? Like, there, in my opinion, there's no, like, something's got to break, or there's like a global black swan that happens in order to get to 18,000. And if that happens, you're probably better off owning guns and ammunition and fresh water and land, probably.
Yeah, and one point on this, Jeff, is, people are always looking for margin calls, liquidations. That's not really a thing here, right? So when we're looking at even these metrics, you got to keep in mind that 18,826 is essentially the price Bitcoin would have to stall out at over a 6-year period to not be able, or to be able to pay off all the debt using all the Bitcoin, which we know isn't the plan, right? It's just a number to be aware of. But what they're doing, and you'll keep seeing this as they rebuild the ladder, is they're laddering out all this debt. And that means that only one maturity is going to come due in any given year. You might see a little bit, like if these notes become eligible for conversion and not all the note holders convert, because they don't all have to convert, then you might see them stacking in multiple years for a while if they're going to hold on to it. But keep in mind that even that 18,000, the real risk number is you're really looking at black swans in specific years on specific maturity dates, right? And that's the reason why this is getting spread out so far. And when you look at those liability to asset ratios that Jeff has up top, in a lot of my posts, you'll see me using 25% as the target, right? And I use it as a fixed target because I think that's easy for people to understand. You can see in there, Jeff's got highlighted an average of 24. The reality is, within MicroStrategy, this is going to be a range that they're going to manage. And it's going to be a range because they have to allow for fluctuations in the price of Bitcoin. So you're really probably looking at a target range between something like 20 and 40%. And what Jeff was saying with permanent capital is important there, because what happens if we go into a bear market and it starts bumping up against that 40%, as long as the stock's still trading, above a 1x multiple, they can use that ATM to go gather more Bitcoin to bring to the balance sheet as permanent capital to pull that leverage ratio back down again, right? So they've got tools. Price of Bitcoin's one of those, right? The price goes up, that impacts the leverage ratio. The price goes down, that impacts the leverage ratio. But then the ATM is another tool to manage the ebbing and flowing of that leverage ratio. So this is very much an actively managed target range that they're working with versus just a static, we have to keep it at 25 or something's wrong. So when they issue new debt, it'll likely pop above 25%. It'll probably be closer to 30%. And then as Bitcoin price rises, that leverage ratio will come back down. And when it gets below, 25 is when we kind of start looking for them to issue more convertible debt. So when you see us making predictions where we're looking at when we think they're going to issue debt, that's kind of what we're looking at. We're looking for that range to get low. And we know that to keep the volatility, they want to keep that range up in that 25% range. So we're looking for them to correct for that as we see it drifting down. So just some comments on what that actually probably looks like internally at MicroStrategy.
Yeah, and the other thing is, I mean, we're treating all of the debt the same here, but it's not, right. All of or half of it or 3/4 of it is up for conversion potentially as well, right? And so if any of the debt converts, all of a sudden your leverage ratio drops drastically and you have a significant ability to raise more capital via convertible debt and add more Bitcoin to your balance sheet.
Yeah, and right now, 3 of the 6, because they've got the brand new one, but the brand new one doesn't even become eligible to go into the countdown until next quarter. So I ignore that one for right now. But right now, as of next Wednesday, it's possible every single convert that they've issued without this last one will be eligible to convert. And then you're kind of watching for, if you go out and you use like a Black-Scholes pricing model on the options value of that bond contract, if you go out there and start modeling that pricing using the IV and all that kind of stuff, when those bond prices get up to around 300 is typically when you're going to see a lot of those delta hedgers convert. They're going to kind of be out at that point. They'll be hedged out, and then they'll be more incentivized to convert. So some of them that have very low conversion prices, right, those are probably going to start converting already. We've already seen some of those shares transacting. Jeff Park posted about them a little while ago where we saw big blocks of shares moving. So I'm expecting some of them are already converting, but we really won't know until the next quarterly report comes out, because that's when they're going to give updates on all the convertible debt. They aren't required to do it right now. But if this price keeps spiking, right, if Bitcoin, now that we're sitting steady up here at 102.5, if Bitcoin runs up to 110, there's a good chance that a lot of those bonds are going to be at that $300 range, and a lot of those guys are going to be looking to convert. And if that happens, we've got a whole new wave of Bitcoin buying that's going to come, because he's going to have an empty ladder to fill, and he's going to have room on that ladder for like $15 billion to deploy, right? So you could see us enter the new year leading into
15 billion.
Billion. Yeah, billion.
Yeah.
And so you might see us coming into this, SBR talk, which is going to ramp up, probably February, March of next year. And you might have sailors sitting there doing $3 billion a week in convertibles and just hammering the spot Bitcoin market, right? I mean, who's going to step in front of that when you have that much of a bid behind you?
Can I chime in?
Yeah, hit it, Grain.
Yeah, so based upon what Ben just said, if I understand you correctly,
attack the tail.
No, I'm going to go down in the garage and put a freaking car up for sale and get more cash. I don't have any cash. I'm going to go sell a car tomorrow. I don't know how long it's going to take, but okay, I'm going to go back on mute.
You might have to go repossess Dan's. You're going to need that money back.
Repossess Dan's car to go put up for sale, go buy more.
Repo Dan's car, get a HELOC.
Was there a deal made with him, Grain, where like if any of us show up in his neck of the woods, we get to borrow the car, right?
Colleen said that, Bitcoin gal. She's like, hey, we want to all come out and drive your car. And he's like, sure. I mean, we have to wait for better weather because he's in the Northeast, and the car's only 2-wheel drive. I would have bought him a 4-wheel drive one if he wanted one, but he wanted 2-wheel drive. So anyway, he did say he's putting all season tires on it so it could potentially move in the wet weather and stuff. But anyway, with that said, keep on going. This information is, look, the 24% there, 25%, your leverage ratio that you calculated. What I said to my friends and my crew call happens to be right before this by a stroke of luck. And what I said to them was, because Saylor bought more Bitcoins in the past 2 weeks. When we get the next run, it's going to run faster because there's more Bitcoin per share. And they're like, oh. I'm like, so when's the best day to buy? Yesterday, right? And so I haven't sold anything. And then it does turn out that I just looked at my account. I do have a spare $500,000 or 463 grand, which I'll probably now buy for February and March calls. I mean, I just noticed that I didn't realize that was in the account. So anyway, hey, and then there's Colleen saying we're gonna go see Dan's car. Anyway, I'll shut up.
I too like to stumble across $500,000 in my
Oh,
fun pastime.
Just found that under the pillow and the couch cushions.
Right, it was just in
Oh,
there.
geez, look at this.
Yeah.
Anyway, keep on going, guys. I
And
love you guys. You're all. And by the way, I want to say something. All the comments, I'm trying to read them as fast as possible. But guys, look, gals, whatever. I read these comments. I think these comments are awesome, and keep on doing it.
yeah, and people are laughing. It's good. Okay, so the other thing to keep into consideration here is that the assets that they have on their balance sheet, right? MicroStrategy has 5 times the amount of assets on the balance sheet than they do debt. So to all the bears that are like, this is not going to end well, or like, run the math, right? Just run the math. It's not even hard. Like, it's not even hard to look at the math. So again, we're going to get into the bear talk here in a slide or two. But the other thing, just getting to Ben's point, this second slide that I have here, this is the debt to how much debt could they raise to reach different average leverage ratios. So this is obviously dated because the Bitcoin price I have here is 95,000. But as of December 2nd, at 95,500 Bitcoin, they could raise 1.75 billion of debt to get the leverage ratio back to a 24% leverage ratio, which is the last year's average. And looking at how much debt could they put on to get to a 30% leverage ratio, we're looking at a $4 billion debt raise can get us to a 30% leverage ratio, which is similar to what it was as of 6/30/24 mid-year. So obviously this changes with the price of Bitcoin being greater than 100,000. It's more like probably 2 billion and 4.25 or 4.5 billion. So that number changes quickly as the price of Bitcoin rises. It's an exponential leverage assumption, which is why the $21 billion plan is so big, right? The $21 billion convertible debt plan is so big because they're going to have capacity to raise that much relative to the assets that they already have on the balance sheet, which is just financial management, right? This is just financial leverage management. So again, to all of the bears who say this is not going to end well, run the math, look at the math.
And I'll make one point because there's been a video that I think a lot of us have probably gotten tagged in a million times now. And I can't remember exactly who it was from. Meldrum, something like
Meldrum.
that.
Yeah, Mark Meldrum.
Yeah, one of those. In the first video, and I haven't watched the one on the Gamma, but I can assume what he's saying in there. But the first video, I really saw like 2 points came out of there. And they're not concerning points, right? Like the first point is scale allows you to borrow more. Well, that's every company on the planet. As your company gets bigger, banks are willing to lend you more money, or you can go borrow more money from the capital markets. Like that's how scale works, right? So yes, that's not a Ponzi scheme, and it was very clever. I'll give him credit where credit's due, right? It was very clever how he draws it, and then he cuts it and spins it, makes it look like a pyramid, but there was nothing there. There's nothing malicious in that. It's just scale matters. And when you've got an asset that's in the adoption curve, like check the news, guys. Like this isn't a fad anymore. This isn't something some kid in his basement has now. This is on the news, being talked about by politicians. There's actual legislature going into Congress. Like this isn't the internet magic money that people tried to make it out to be. And if that's still your mindset, that's never going to change for you, right? If that's still how you view this, you're not paying attention to start. But second, you're going to miss the whole boat, and you're going to be screaming about it all the way up the S-curve of adoption. And so the fact that this company identified that earlier, took a risk, make no question about it. MicroStrategy bet the entire company on this strategy. And you've got to take risks like that in order to get the rewards that they're seeing. And the fact that they're issuing this debt, but they're taking capital and putting it on the balance sheet where it lives forever, right? Not like companies with earnings per share that they've got to redeploy immediately to go build up, to vertically integrate or build a new facility or hire new salespeople, because the minute they stop growing, it craters. Your value's gone because all the value is based on the forward-looking nature of your earnings. This is different. This is them buying an asset that now can live and perform on the balance sheet forever. You don't lose any value in that transaction. It's not value erosive, right? So when you see that, that's a very different strategy. The other thing that he basically said in there, and I'm trying to remember now, I've ranted and I lost my second point here. There were two things. One was the benefits of scale. Oh, and I think the other was it was about the people that got in early were getting disproportionate benefits to the people that came in late. Welcome to every opportunity ever.
On the planet.
Right?
Of
course, the people that came in first benefit more than the people that come in last. That's how being early works.
They took more risk.
Do you think it's unfair for the people that bought Apple before they invented the iPhone to get the benefit of the share appreciation because the iPhone's successful today, and the people that buy it today don't get the same type of return out of the shares that the people who took the risk early? Is that unfair to you? Like, that's not some big malicious scam out there. That's how taking a risk works. If you're early, you get the reward. If you wait until it's safe, of course, there's no more upside there, right?
Yeah.
Now it's a safe thing. That's a whole different setup. So when I watched that video, those were the two things that I saw. One, scale allows you to borrow more money. Great, right? Yeah, that's not magic, and it's not a Ponzi scheme or a pyramid scheme. And being early, you get the rewards. That's how being early works in every opportunity on earth. So nothing groundbreaking there. I've gotten that video probably 10,000 times.
100 times.
He's well spoken. I'll give him that, right? I enjoyed listening to him. It was great. I'll watch his other video. But, when I saw that and those were the things, and that was what he was basing it being a pyramid scheme on, it doesn't matter, right? That is so not what a pyramid scheme is. And being early is not a flaw, right? Getting the benefit of being early is not some negative. If you're one of the first convertible bond buyers, you took a risk, right? You get a better reward in the shares you achieve from that than the people that are going to do it when MicroStrategy is, a $1 trillion company and they start buying the convertible bonds then. It's a different setup. So anyways, I'll get off my high horse here, but I've gotten that video a million times now. So I just thought I should at least say something about it.
Everybody has asked for us to cover it. So I'm glad you hit it early. And since we're talking about bears, this is perfect. And, Adrian, Neethu, Mason, I want you guys to chime in here. We're going to go through bear classification. Okay. I asked you guys to do a little bit of bear homework and identify some bears that you've seen in the community. And this is also a call to action for everybody that is watching this. We need help. We need help identifying and classifying the bears. Okay. This is going to be a lot of fun, and we're going to have a ton of fun doing this because all of the bears are so soft, and we need to call it out. So please, if you see a bear in the wild on Twitter or Nostr or whatever, please hashtag TN bear sighting. This stands for True North bear sighting. Okay. And I've got all these different kinds of bears over here on the left-hand side. So we've got koala bears, teddy bears, gummy bears, black bears, and grizzly bears. And there are different qualities along with them. And the reason that we're creating this is because, there's a lot of bear talk out there. Okay. There's so much talk. There's so much bear talk out there. And really, like, the only bears that matter are the bears that have a financial, position or skin in the game. So we get that brings us to our first category, the koala bear. So the koala bear, go ahead, Ryan, you want to jump in? Oh, he's like, first one. We got one.
I'm like the Vanna White. This is number one.
This is number one. Okay, perfect. So we've got the koala bear, right? The koala bear is all talk, no financial position bear. So the thing about koala bears is they're actually not bears. They're marsupials. So these are the bears that think they're bears, but they're not actually bears. All right. These are the people that this will not end well bears, the Ponzi bears. This is a Ponzi scheme. This is a pyramid scheme bears, or mNAV is going back to one bear. These are guys that have no financial position against MicroStrategy. Most of them generally are long Bitcoin though, which is kind of weird. But they just don't like it. They just generally don't like it. So, it's like, I need to say something. Their brains are just going crazy. Like, I just don't like this. I miss this. How could I miss it? I need to say it's a Ponzi scheme because that's what it kind of feels like. So threat level, right? What is the threat level of a koala bear? None, but they're cute though. Okay. Like koala bears are cute. So please, if you see a koala bear in the wild, don't let them freak you out. Like they're cute. You just be like, what? You're just a koala bear. You got no skin in the game. Like if you post your position and have a short position, like fair, right? Okay, cool. Let's call him a koala bear and just move on. In the future, for any future True North episode, we will have a bear segment where we will identify some bears that have been identified by the community. So please share with us your bear sightings, and we will share them weekly. All right,
I have a few bears that I've found.
Yeah, what do you got? What do you got, Adrian?
They're not on this list though, and I'm probably going to piss a few people off by saying them, but I like doing that. So we've got quite a few bears that I've seen in my DMs and throughout Twitter this week going along with this theme. The first one I'm going to call is a power bear or power bottom bear. Those are the bears that were power law lovers just 3 weeks ago. Now all of a sudden are in the MSTR community talking about how great an investment opportunity it is. I find them to be very, very amusing because they were very aggressive with the power law, but now they're being somewhat submissive with regards to MicroStrategy, which is why I'm calling them a power bottom bear. You also have, I call them poo bears. They like to poo-poo anything MicroStrategy. They like to say, oh yeah, sure, it's working now, but you should just buy Bitcoin. You're paying 3 times as much for your Bitcoin, blah, 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 blah. I would say the threat level for both of them is somewhere between, I don't know, a bee sting and stepping on a Lego, if you want to really classify it. I have another classification of bear that kind of had to throw myself in. The bear that was bullish and should have stayed bullish. I don't even know how we would call that, but I talked myself out of my own bullishness a little bit this week by trying to find the opposite side of the trade. And yeah, those are the 3 bears that I found primarily. There's some other ones lurking around that are showing up.
Well, I'm sure they fall into any one of these categories. So let's power on, or let's go to the.
Well, before you move on from the koala,
yeah,
most koalas have chlamydia. Just fun fact for you. Just to let you know.
I also want to point out that they're super drug addicts and they're high all day long. So imagine that pothead buddy of yours that you knew when you were sitting around in college and they just did conspiracy theories all day, right? That's these guys, right? They're harmless, but they like to talk a lot and they like to get loud sometimes, but sometimes we just attribute that to the drugs. It's okay.
Could that also be a gummy bear?
Yeah. So the gummy bears are coming up. That's the third slide. Yeah, go ahead, Mason. You got one.
I have to say, so I posted the Jeff, you tagged me saying koala bear, and I said threat level none, but cute though, and put a picture of a koala bear, and someone said, Mason, you've clearly never come across a koala bear during mating season. So if the koala bears are, seem to be in mating season, maybe take a step back. Maybe just leave it alone.
If they're repopulating, repopulating, yeah, maybe just stay away while they're repopulating, and then just we'll figure it out from there. Oh my God. Okay, well that is a curveball. All right, let's move on to
chlamydia and mating. All right,
chlamydia and mating. Okay,
that's probably fine, but whatever.
So we're moving on to the teddy bear. So the teddy bear is the I'm short MicroStrategy, I'm buying puts bear. Okay, so this is the softest of all the bears, right? You're still not a real bear, and you're not actually shorting MicroStrategy stock, right? You're not like selling the stock that you don't have. Puts are a leveraged gamble in one direction that can be short term, right? These are not a true short position. If your put thesis is wrong, you just lose the premium that you paid, and it's generally a small position against MicroStrategy. And they generally, these teddy bears that I've seen are generally long Bitcoin as well. So their position is, if I'm wrong, and they tend to be loud, if I'm wrong, I only lose the premium that I hold to the put option. So again, here, threat level is low, and these guys are just soft. They're little pushovers. You can literally push them right over. Where I've seen the most teddy bears is really on Reddit, where they say that they're short MicroStrategy, they bought puts, and it's just so laughable. Like it's not really that bearish of a position, and you're bullish Bitcoin too. I don't know. It's kind of weird. So there's the teddy bear, and then there's the gummy bear. So the gummy bear is what I like to call your degenerate gambling drunk uncle bear. So this is the bear that is selling naked calls. So I've also seen these guys on Wall Street Bets. This is also not a pure short position, right? If you're selling naked calls, this is an infinite loss position without any pressure. You're not putting any pressure on the spot price, right? You're generating income by selling a naked call, but you're not impacting the price of the underlying stock at all, and you're just providing liquidity for anybody that's buying the long calls. So these bears are generally this is a Ponzi scheme bear, this is a pyramid scheme bear, 1x mNAV bear, and generally a non-coiner. Like, they don't understand Bitcoin itself. So the guys that are saying like, and maybe the teddy bears as well, the ones that are buying puts or selling naked calls, they generally are non-coiners. They don't believe in Bitcoin, or they're a shit coiner. They don't, they believe in other altcoins or whatever. And threat level for these guys, low, and they're sweet, right? They provide liquidity for call buyers. You're like, thank you. I will eat you right up. I'm going to be buying those calls, and thank you very much. Go ahead, Mason.
I just think we should be testing what's in the gummy bears, because I think you have to be high to be shorting MicroStrategy right now. Like, literally, it's the craziest thing to do.
It is crazy. And I know our very own Josh got into the gummy bears a couple of days ago, and I wouldn't think too much about anybody that's eaten a little too many gummy bears. They might just be a little confused. Okay, so let's go to the next bear. This next bear is the first important bear. So this is the black bear. Okay, these are the true short selling bears, and we should probably take them seriously, right? Like, black bears can fuck you up. Black bears are often found rifling through trash, right? They're often eating trash. They're out, finding the worst of the worst, and just digging through trash. These are mostly institutional funds, Gareth Soloway, Citron Research, Carousel Capital, and these guys are true short sellers, right? And what a true short seller is, for those that don't know, these guys are, and gals, I guess maybe, are borrowing the stock to sell it at the market. Okay, they pay an APR fee for the entire time that they hold the position short, and they promise to deliver back the stock to whoever they borrowed it from, ideally at a lower price. So this is a true short seller. These are the people. I respect anybody that's shorting MicroStrategy stock, because this is a very serious financial position where you're paying a fee to hold this position open and thinking that you're right. So this is the true, like, bull versus bear pressure is from true short sellers. So we should take these people seriously. The other thing to know about black bears is, if you get caught in the wrong house, if you're a black bear and you get caught in the wrong house, you're going to get a 30-06 to the forehead, like Carousel, and all of a sudden you're not around anymore. Okay. Or, whatever the fund was back in March that got blew up. But go ahead, Ryan, jump in.
Yeah, I want to double down on what you said, Jeff, about like these kind of bears are like sifting through trash. So the most successful short seller like firm that I know of today is Hindenburg Research. And it's not just that they're looking at bad companies, they're looking for fraud. with a capital F. They're looking for corruption. They're looking for like bad actors, and they're serving as like the police. So on like the unhired police of the financial markets to then post like very compelling research. Like they did this with Nikola, like that absolute fraud who tried to like, you know, scam off the Tesla thing. I could tell, I could see that guy a moment. It's all it took for me when his shirt was the ticker symbol NKLA, just the first name of Nikola Tesla. And he had the ticker symbol on his shirt. Bad actor. That's what they're going for. These Gareth Soloway, Citron, Kerrisdale, like they're just in a bad trade. But I think there's an important distinction there, because when you're talking about the trash, Jeff, we're not just talking about like bad companies who were like, and then short sellers are betting against their future financial performance. The best ones, this is what Jim Chanos was doing back in 2000 when he, you know, shorted Enron and was like trying to get on the phone with journalists being like, this is an absolute fraud. It's corruption. I'm betting against it. So there's the trash thing. I just wanted to double down there.
Yeah, I mean, it's so true. It's so true. So anticipate anybody and the black bears that are out there. We need to know, like, being aware of the black bears is actually really helpful. So again, hashtag TN bear sighting. Let us know, because there's so much noise. We need some signal throughout the noise. The black bears, anticipate them to time very important events like they did just recently, right? With the $3 billion convertible bond offering, the price was running up. They probably got tipped off at when they would delta hedge their position. And they said, all right, cool, I'm going to ride this wave down. And I know exactly when it's happening because I got tipped off from somebody. And, you know, there are 4 or 5 funds that short the stock for a day or a week and hold the position until they feel like it's over. So it's good to know that these people exist. They're going to time it. Like Saylor has monetized the volatility of their stock. So like that is the entire product. It is there for everybody. It's there for people that are going long. It's there for people that are going short. It's there for people that are doing ARB between Bitcoin. It's there for convertible ARB desk, like all of these different things. And we're going to see these people. They're going to be around. And the short sellers, they're definitely going to make a lot of noise, right? Gareth Soloway just said, I'm short MicroStrategy. He was short for 30 minutes, made 12%, and then blocked me on Twitter. Like it's gonna happen. They tend to make themselves known.
Was this when he took his starter short position?
Oh yeah.
I love that. He's like, I'm taking what I call a starter short. And that starter short turned into a nightmare real fast. But yeah, these guys are pretty easy to find, right? They put real money in the game, so you got to respect that. But it's on a trash thesis. You know, you'll notice it by the very poorly done research reports. So
yeah,
easy to spot these guys.
RIP,
they'll be popping up a lot.
Yeah, RIP Kerrisdale, man. I mean, the thesis that they put together was literally high school level. It was so poor, but and it's so funny. It caused a bunch of noise internally as everybody, you know, people that I've talked to about this trade, they got really freaked out. They're like, look at this report. I'm like, this is the worst thing I've ever seen. Like literally a high schooler could have made this. That guy's managing $500 million of capital. I'm going to steal that guy's money, you know? Oh my God. So, Ben, you're on mute. So lost you.
Jeez, here we go. I'm like every guy on a Zoom meeting ever, but I said, just keep an eye out for these when we're coming into the convertible bonds, right? Because they're going to definitely, like, these guys aren't stupid, and a lot of them probably do make money. I know we dunk on Kerrisdale all the time, but if you look at the price action after they did their short report, they probably actually made a lot of money on that one. I'm really hoping they come back for round 2 and they just get nuked out of the water, but whether they do or don't doesn't really matter. But when you have these bigger and bigger convertible bond offerings, you can start to watch for when that delta hedging is going to come in, those short positions are going to put on, and they're going to put out these short reports like the day the bond offering gets announced, because they then know that the next day or two, the pricing is going to happen, and that's when all those shorts are going to be put on. So they'll add more shorts to the pile, and they'll just try to push it a little further than it would go on its own, right? And a lot of times it'll be basically a scalp short. They might be out by the end of the week. They're just going to try to push it really fast. So when you start seeing that FUD pop up, like coincidentally the same day as a convertible bond, just be aware that that's probably what's happening, right? They're going to use other people's capital entering the market and putting sell pressure out there to push their own further faster, right? It de-risks them trying to do this on their own. They're just riding a wave. So just keep an eye out for it.
Right. Absolutely. Okay. We're going to the grizzly bear. This is the final bear. Threat level high. Take these people seriously. Grizzly bears are a rare bear. They're often hiding in the shadows. So these are your politicians. This is the SEC, House of Representatives, Senate, the Fed. They possibly have hidden financial positions that we won't be able to see, and they've got legislative power and pull. These are generally not outspoken bears, and they can surprise you when you least expect it. But we need to know if these people exist, right? This is your Elizabeth Warren or Gary Gensler. We all know those people. But if these grizzlies start making themselves known within state level politics or these other positions, I think we need to know about them. We need to know that they exist. So please help us ID the potential grizzly bear. And lastly, the moral of the story is bears will be bears, right? And the whole purpose of categorizing these bears is to just take some of the heat off, right? Like the first three categories of bears, so many people are willing to say shit online and not have a financial position. They've got no dog in the fight. So I don't respect those people at all, nor do I respect their opinions, i.e. Jason from the All In podcast or whatever. Like, dude, exactly. Right. What's he got? 200,000 followers on Twitter, but it's like that kind of stuff.
That dude cried so hard during the SVB fallout, and I was like in his comments being like, "Dude, look, Bitcoin's the answer. Hello, like how have you not understood this?" And he was crying in all caps because guess what? He obviously had money there, saying like, Yellen and Powell need to like guarantee all this money. It's like those are sorry to cut you off, Jeff. Those are the worst people on planet Earth who try to position themselves as like leaders or even worse, even more cringe, like influencers. And then the moment they face adversity, they cry so hard. Whereas to give you the contrast, I'm the kind of person who wants to like delete myself from the internet. But he wants to grift. He wants this audience and to go to conferences and speak at and just collect speaking fees, by the way. That's what he's done his whole life, is just grifted off of the success of others and then cried so hard during the Silicon Valley Bank thing. And now he has the absolute audacity to be like negative on MicroStrategy. It's like, of course this guy wouldn't get it. Of course he wouldn't have the mental capacity to understand what's going on here with an honest actor and a uncorruptible, coin, not some crypto VC scam coin. Like they would talk about how they're clearly manipulating the price of Solana and getting it at a discount, and then a week later selling it to retail at the full price. I mean, let me just stop the rant there.
Oh, then did you see him come crawling back once Saylor stopped following him, right? And all of a sudden now he wanted him to come on his podcast and do all this again. It was just so pathetic. You can't respect that.
Yeah, I just want to hop in here. And so I think a lot of these bears want engagement. They want a reaction out of people. And that's what I really love about this hashtag, right? It's such an easy way to just categorize them, put a little photo, whether it's koala or a gummy bear or God forbid a grizzly. And, just leave it there. Like don't feed into the energy of the bears, because we have our thesis. We've done the work. They clearly haven't. A lot of these guys have done like, an hour of research, and they're talking to people in the trade who've done 3 years, 4 years, 10,000 hours. It's like, it's not worth our time, people. So drop the hashtag. True North will repost it. It's going to be hilarious, and move on, because we have better things to do.
I'm really concerned about these koala bears, though. The chlamydia and
The
the
chlamydia.
that threw me. So I'm gonna have to drop that hashtag quite a bit this week because these fuckers are everywhere.
Yeah.
Now, people
They
are
look cuddly,
looking
but-
for the polar bear, right? Because what's the saying? If it's black, fight back. If it's brown, lay down. If it's white,
If it's
see
white,
light,
take it-
right? Because it's
Very good
over.
night, yeah.
So if Sailor turns into a bear, bad news, people.
That's the polar bear.
He's
That's
the only polar bear we know out there right now. Like that's going to be bad news. No way around it. But luckily, I don't think that's coming.
No.
Yeah.
Are the Bitcoin only bears? Are those koalas too? Or we got to give a new classification?
I think
for
they're
them?
I think they're koalas. Yeah, because it like they're helpful, right? And they're cute. You're like, great. Like, thank you for liking Bitcoin. I'm glad that you like Bitcoin. I'm glad that you exist. But you don't like MicroStrategy. Fine. Like whatever. Like
They're the disbelief bears, right? Like they're rooting
Yeah.
for the thing that makes MicroStrategy work, or they're rooting for the thing that makes MicroStrategy work, and then in the same breath saying MicroStrategy is not going to work. You're going, well, are you rooting for Bitcoin to be successful and get adopted broadly? And if you really believe that, like you say, how are you reconciling that MicroStrategy is going to then crater, right? I mean,
Right.
you can't plug those two realities together. Now, yes, maybe way down the line, you might start seeing convergence, right? Once we reach escape velocity and, Bitcoin's trading in the millions of dollars per coin, like maybe then MicroStrategy, because they can accumulate and create the same yield, might come down to 1 times mNAV. But that assumes that they have no ways of making money in a future. And if you see a future with adoption, that means there's monetization opportunities. There's no way around that. If you think Bitcoin's going to be ingrained in the financial system, and you think that these financial companies don't want to get their greedy little fingers on it and find ways to make money, you're out of your mind. It's going to happen. It's a matter of when. So they're accumulating, and everyone thinks they're going to hit this point where there's no more accumulation that's going to happen. And I say, fine. But that's probably when we're into the deploying stage, because now there's global uses for it. They're going to have countries wanting to borrow this stuff from them, right? Like there's going to be ways. I don't know what they are yet. I can't tell you because we're still getting through the regulations and we're getting the clarity around all that stuff. But make no mistake, if you're paying any attention to the macro environment and what Putin's saying and what's going on in the US and what's going on at all the other BRICS countries, and let's see what comes out of Bitcoin MENA, because I'm betting there's something big there that's going to start really forcing people down a direction. But if you think countries have a use for this asset, and you think that in the rest of the world there's zero uses for this asset other than just holding it, that's
You're
not
out of
real.
your mind.
You've
You're
got
out
to
of your
reconcile what
mind.
you're saying.
You're out of your mind.
Sorry, I'll get off my soapbox, but
it's
it's driving me nuts that people are talking in circles and they're making this a static thing that never does anything ever. And then in the same breath, they're saying we're going to get global adoption by nations that are going to trade with this stuff. Like, are you hearing these two statements and reconciling them? Because they don't connect, right? If nations can use it, people are going to be able to use it. State level governments are going to be able to use it. Corporations are going to be able to use it. Like that's going to be a reality if this gets adopted. So just keep that in mind that at some point there's monetization opportunities, and you can start doing the math on how much they hold at how small that monetization opportunity needs to be for them to just crush all of these bear theses. Like it's going to take nothing. They could get 1/4%. And it's going to be a nightmare for bears. So, anyways,
yeah, a lot of this is there are a lot of Bitcoiners that I call them. The best way you can say that is like Bitcoin activists. They have a very dogmatic view about Bitcoin that it must be only Bitcoin. Anything that is monetizing Bitcoin or sits on top of Bitcoin or anything like that is impure, faulty, against the thesis, so on and so forth. So they do a lot of this on Twitter, and the problem is a lot of them have large followings as they've been around a while. But to Ben's point and to other points, I don't understand why there's such heartburn accepting that MicroStrategy might actually be good for Bitcoin, in the sense that it is going to only allow it to become more ingrained into the financial markets, which is exactly what we want. We want it to become systemically important. That's not going to happen purely just as a peer-to-peer electronic cash system. And even in that use case, a peer can be a nation state just as it can be an individual. There's nothing saying that peers must just be individuals, right? So I think a lot of it is that you have a lot of people that are butthurt, that want to be right, that think that Bitcoin was going to be it and that's it, and there's going to be nothing else done to it, nothing else going to be growing on top of it. There's the ossified Bitcoin movement that people are like, Bitcoin must stay pristine and perfect just as it is, never scale it, never change it, never do anything. And then you have the weirdos that maybe think that they are, I don't know, the only purists left, and they're standing on this soapbox being very dogmatic about what Bitcoin should be and what MicroStrategy isn't, and it's just fiat games on top of Bitcoin and so on and so forth. And whenever I run into them, I just send them one DM, and this usually kills the conversation. How do you buy Bitcoin? And once I ask them that question, everything starts to spiral. So Bitcoin needs fiat for the time being. Bitcoin is going to upend fiat. It's going to make fiat. It's going to take us to fiat 2.0, and Bitcoin is going to be center for that. But fiat's not going anywhere. MicroStrategy is not going anywhere. Nation states aren't going anywhere. People are going to adopt it. Nation states are going to adopt it. The game theory is going to play out, and they can suck a dick. And that's just how I feel about it.
Yeah, there's going to be a transition for sure. There's going to be a hybrid economy where Bitcoin and fiat exist together in harmony, maybe for a period of time until it doesn't work anymore, until Bitcoin is a better alternative.
Yeah, so I want to chime in, guys. So because this is the third cycle. In the second cycle, I had mentioned two things. Obviously, I wanted to spot Bitcoin ETF because I bought GBTC, and then we kept on talking about institutional money coming. And then the other thing is that I was there at the Bitcoin conference when El Salvador began to buy Bitcoin. But what happened was I had mentioned before that, based upon game theory, and this is 4 years ago, once MicroStrategy started buying, that solidified that corporations were going to adopt this. And there was a lot of pushback. That is not the ethos of Bitcoin. The whole ethos, going to your point, Adrian, was with the people that are saying this, is that we want Bitcoin to be pure and non-sovereign. And when it's purchased in a wrapper of a spot Bitcoin ETF or through MicroStrategy, it's supposed to be not part of that. And I was like, oh my God, if it's good for a person to buy Bitcoin, then it must be good for a company. And if it's good for a company, it must be good for a nation state. And I don't know why they can't make that leap. It's not really much of a leap. It kind of makes sense to me. So with that, because I've gone through this stuff already 3 years ago, I'm just tired of saying that to people, of combating the FUD. And so that's where we are, folks. If something is good for an individual, it's good for a company, and it's good for a country. I think it's pretty simple.
Also, like, what do you think is going to happen when one of these nation states, and I hope it's us, wakes up and just decides to start printing money to buy Bitcoin? Like, honestly, all it takes is one. The first country to do it is going to win.
It's gonna have to play. If you believe in Gresham's law, or I just found out about the Nash equilibrium today. I knew about the prisoner's dilemma, but if you look at any of these possible outcomes, Adrian's right. Once a country starts doing that to somehow equalize the power shift in the world, the other countries have to adapt fast, and that's when things change very, very quickly. So.
But I think the rush has to come before a country that can even print their own currency, right? I mean, by the time the U.S. is printing currency to buy, the opportunity's passed for smaller countries that don't have their own currencies, right? Like there's only a few countries on the planet that are going to have that ability to print their own currency and buy Bitcoin with it, right? There's a handful of them. But the rest of the countries, they're going to back themselves in a corner if they don't come to the table fast. You've got to beat the big guys in, because you're going to have one shot at changing the economic standing of your country in the new digital age of capital. And you have to do that before the giants get in and move the market, because you do as a country have finite resources if you don't have your own currency to print. So these guys have to wake up. If this becomes even a 20% reality that the US is going to get in the game, or if we see a major BRICS country make a major purchase announcement at Bitcoin MENA, buckle up, because now the race is on and you've got to pay attention, because it's real. The minute that a non-friendly nation starts accumulating Bitcoin, the US doesn't have a choice anymore. It's out of their hands. They don't get to do it willingly as an early adopter anymore. Now it's a defensive tactic. Now they have to buy in defense mode to protect themselves. And people greatly underestimate that. Like, if you think that there's a price at which the US is going to go, no, we're cool if everyone else gets all the digital capital in the world and starts trading with it and stops using our dollar, it's not going to happen. Like, that is a threat. That is a real threat that they have to address. Yeah. And it's easy for them to address right now. But the more it gets out of their hands, the harder it's going to be, and the crazier this whole thing is going to get.
Well, with that, what are the sovereign nations that can print their own money? We've got the United States, we've got China, we've got most of the European nations.
Japan, Russia.
Russia. Would some of the Middle Eastern countries even need to do it?
But you're also limited to the Bitcoin that are on exchanges that'll settle in your currency, right? That's another tough one that people overlook. Like, a lot of it does need to happen probably in US dollars, just because that's where the bulk of the Bitcoin are going to be trading. But and
that's why I asked, because if you look at El Salvador, they can't. I don't believe they can print their own currency. But the way they went about it is, I think the way these smaller nations will have to go about it: find money to accumulate Bitcoin, put it on the national balance sheet, and then wait for the fireworks. Because people are really underestimating, when Bitcoin is $1 million a coin, El Salvador is going to be.
They did exactly what I'm saying these other countries have to do, right? They were tied to the US dollar. They got rid of their own currency. They had finite capital, so they had to be early. Yeah,
by default, a lot of these nations are tethered to the US dollar. So that's why I'm using the term sovereign nation. You're a sovereign nation if your money can exist separate and apart from the US dollar. And I'm doing it in my head right now. I think that's about 23 nations at most. Yeah, someone please check me on that. But I think that's what the number is.
Sorry, Ryan, you're being way more polite than us. Go ahead.
Oh, yeah. Sorry, yeah, go ahead.
He raises his hand. It's so funny.
But I don't know if he's pointing or doing that. You know.
I have a comment. Go ahead, Ryan.
This will be my hand raise. I always wanted to be a good student in school and learn respectfully. Gentlemen, ladies, here's the reality. Yes. Like, here it is. What Ben Workman, a sophisticated young man, was saying was so inextricably linked to caring about long-term outcomes. America has not shown that. Most countries of the world, and sure, you can name one or two, generally speaking, most of them are not concerned about long-term outcomes. They're concerned about short-term political gain for themselves. So that's like number one. Number two is that when we talk about countries and all this stuff, look, it gets messy. And this is what like the hardcore Bitcoin purists like just don't understand. Like, they think like in like tomorrow or next year or 5 years from now, like everything is going to be transacted in Bitcoin, from one slice of hot pizza to every stock on every country's global exchange is going to be priced in Bitcoin. And it's like, no, I just don't see that, right? We're talking about entities like NATO, militaristic like power alliances, right? And all this other complexity. And to think that they're just going to just adopt Bitcoin because it's better. We all get that it's better, right? But that's not the reality of life. they want to stay in power. There's a certain like political incentive structure that is going to push them in one way. They're not just going to be like, oh, the magic internet money with, you know, Hal Finney and the cypherpunks and 15, 20 years ago, Hash Cash and Adam Back and all these characters. We're just going to use that as money because it's technologically superior, right? Like they're not going to come out and start sounding like Michael Saylor. So like, when we talk about like who's going to print money for this or that, I would just suggest that we think of this as like a much more complex question of real life power structures and like large swaths of militaristic power that are supporting them. You know what I mean? It's very complex.
I totally agree with that. So when I'm saying that I think it's a defensive maneuver, I don't think that the NATO countries are going to want to do any trading in Bitcoin. My point is that they're going to have to buy it to stop that from taking over, right? You at least have to have enough proportionately to hold your position in the world, right? Because if you're the BRICS nations and all these countries don't want to hold a boatload of rubles on their national balance sheet, right? But if you want to trade with Russia, if you don't want to hold the ruble, but they're willing to settle trade with you, like they might price the product still in, you know, US dollars. And I don't think the US dollar is going away anytime soon because I don't really see Bitcoin being a transactional replacement at a smaller scale. But where you do have to look at where is Bitcoin a perfect settling currency for transacting, it's at nation state level trade scale, right? There you can do it. You can settle trade at that scale very easily with Bitcoin because you're not doing microtransactions there. But if I was looking at how do I destabilize the US dollar in the trade markets, if I'm these countries, the best thing that I can do is go to something that they can't take over and control, right? If they're already accumulating and mining and doing all this, they could start to force other countries that trade, like a lot of people trade with China, right? Imagine if China decided that, you know, they're not going to try to go head to head with the US in a military battle. But if China decided that with all the products they're manufacturing, that they're going to use this alternative currency, right? You can either settle it in their currency or Bitcoin. That would be such a crazy shift globally that if you're these NATO countries, you have to respond, and you might just respond by buying it just to have it, right? Just to make sure they don't consolidate it all within their borders. That's the game theory I see playing out. But I see Bitcoin and the US dollar and all these coexisting for a very long time, right? I don't see the pricing. That's such a mental shift across the world to try to reprice something in Bitcoin. People right now understand US dollar pricing. I don't see that really changing in the near term. But I do see this being kind of a long, drawn out attack on the dollar globally as a reserve asset for some of these other countries that we've been pretty openly hostile towards for quite a while now.
Yeah, and to that point, this is a tweet from Trump 5 days ago. The idea that BRICS countries are trying to move away from the dollar while we stand by and watch is over. Right? So to your point, this is a threat. This is a definite threat that is being taken seriously. And that's something that these other countries, they read something like this. And in reading something like this, if I were another country, I would be even more incentivized to use something else, right? It's like, oh, you're going to control me even more. I need something where you can't control me. And
so,
it's an interesting dynamic. Yeah, go ahead, Grain.
Yeah. So look, somebody had mentioned this. So in the comments, and the person said Bretton Woods 2.0. So folks, you should look up Bretton Woods. And so in 1944, after World War II, a bunch the victorious countries got together in New Hampshire. In Bretton Woods was the town. That's why it's called Bretton Woods. And then what they did there is they set the price of the US dollar, they pegged it to the price of gold, whether it was like $25 or $35 an ounce. I don't remember the exact amount. And they told all the countries, you will agree to this fixed conversion rate. And then over time, with the Nixon shock in 1971, and then what happened after that was the Plaza Accords, I believe in 1987, which took place in the Plaza Hotel, which was, I don't know if Trump currently owns it, but that's on the corner of Central Park South and Fifth Avenue. And so that allowed the full free floating currencies. So what's different now than Bretton Woods 1.0, which nobody calls it that, just Bretton Woods 1944, was that a bunch of countries got together and decided what the world order would be. Well, you have OPEC, which is oil producing and exporting countries, which is a cartel trying to set the price of oil. But all other countries that are not part of OPEC cheat, and they will pump oil in their best interest. And so what's different now than was in 1944, and it's been different after 1971 and where we are today, is that the concept that countries will get together, whether it's the G7 nations or the top 10 nations will get together and will coordinate and fix what's going forward, is unlikely to happen. What's going to happen is it will be a race to see who can acquire. And the United States doesn't have to print currency. They could just go, we have 8,000 metric tons of gold. They could sell some of that. And I just want to finish the delusion on this. Peter Schiff said that the US government wouldn't purchase gold because that would send the wrong message. And I'm like, dude, I can't even think about how your logic works, that the US government wouldn't buy gold because that would send the wrong message. But the US is the largest holder of gold, and you're the biggest proponent of gold. So what I'm trying to say now is that chaos or first mover advantage or warfare, currency warfare, which has been going on at least for the past 20 years, will now be accelerated based upon what we've seen with Bitcoin. And so I don't know what's going to happen in 2 or 3 years, but what I will tell you guys, I say all the time, the next 7 months are the most critical months for you folks to establish where you want to end up in and where eventually you want to retire or whatever you want to do. Don't screw up the next 7 months. Don't sell weird option positions and stuff. If you don't know what to do, I would just buy and hold MicroStrategy in Bitcoin and you'll be good. Okay? And so with that, on my rant, how this plays out, I don't know, but the number is going to be a big number. And countries, once they come in, I think multiple people on this thread will end up doing what Ryan has done. We will probably drop off of Twitter. I will join these calls. I've already said that today. I'm happy that I didn't use my real name. These people know who I am, right? But most likely I'll have a much different role. I will probably go to be a panel speaker at events, right? And I don't know what name I'll use, either my real name or grain of salt. But I'll be out there in the public, but I may not be that much on Twitter. And I don't want to post really any more about what my net worth is going forward, because that actually is an OPSEC problem. So I'm a little bit of a rant here, but there will not be a coordination between nations with how to divide the currency. It will be each country in their best interest. Yeah, go ahead.
Yeah, so with the Peter Schiff comment, the reason why he said buying gold was send the wrong message is because in his mind, and I can see the point, is buying gold will signal to the world that the United States doesn't have faith in its own currency, and they're looking to bolster it with gold. I think is where he's going with it. The whole Bretton Woods 2.0 thing, I also agree in the sense that, back to the sovereign nation point, no sovereign nation or no group of sovereign nations is going to agree to peg their currency to a underlying currency they can't control. So I think that we'll probably have something that's in the middle. I can see an agreed upon exchange rate for Bitcoin. I do not think that every nation or a group of nations is going to come together and say, we're going to peg our dollar to Bitcoin. It's going to be more like Bitcoin's going to be worth X amount, and then you're going to have a rolling series of exchange rates that go currency by currency globally, so that the exchange can happen more quickly on layer twos and whatnot. But I've never thought that hyper Bitcoinization was going to be a world where everything's priced in sats and we're talking about buying slices of pizza or whatnot in sats instead of dollars or pounds sterling or whatever. I never thought that was practical. So Bretton Woods 2.0, I don't think it's going to happen, but I think there'll be some form of a Bretton Woods-ish agreement in the next 20 years or so, where there is an agreed upon exchange rate for Bitcoin that would probably be as close to hyper Bitcoinization as we'll get. That's just my opinion.
Yeah. So let me try.
10
So what I
million.
think, without coming with a new agreement, what I think that what countries would do is they'll probably say, hey, we look at the last 30-day rolling average of Bitcoin. And we just say that, let's say the rolling average, well, I can probably look it up right now. In fact, I'll tell you. The 50-day moving average of Bitcoin is, 1 second. 50-day, give me 1 second. 50-day moving average is
Well, it's probably like 88 or something.
82,000.
Yeah.
So when you go to transact, they'll just say, look, we're going to take the 50-day moving average. It's $82,000. Give us this amount of coins. And you wouldn't change anything with the protocol. You would just handshake and say, that's what we're going to use for the conversion price, because picking on any given day would just be impossible. And so both parties would come to an agreement of what the average price is. Then they would transact and they would feel good about it.
Well, I think I don't know if you need to do that point in time with layer twos. You can just say every single currency in the world is pegged to Bitcoin in terms of an exchange rate, right? So that point in time, you're exchanging whatever the appropriate amount in your currency is to another currency, and then Bitcoin can be the middle ground there.
Yeah, I understand what you're saying, but what people always feel bad about is that after you do the exchange, one side goes up, the other side goes down, and people have remorse. And what I'm saying about, hey, we're just going to come, we know it's going to transact at this price, but let's just calculate what the number of Bitcoins are based upon the last 30-day moving average and do it. It's not that the conversion doesn't work in real time and that it doesn't work for different currency pairs. It'd be easier just to say, that way both parties don't feel like one party got ahead of the other one. That's all it's saying.
Yeah, we don't have to belabor this. I'm just thinking about it in the sense that each individual currency will have their own peg to Bitcoin. And that slippage you're talking about, where you're saying that one exchange rate would be more beneficial to the other, I think that's where something's going to have to be worked out in the near term.
No. So this is important. I'm not talking about a slippage. All I'm saying is that, let's say if Bitcoin's at $100,000, and let's assume that the 30-day average was 100 grand. You just say, we'll exchange the number of Bitcoins at 100 grand. But if the price was 95 and 105,000 over 30 days, and the average is whatever, 97,000, that's what we transact at. It's not a slippage. It's just saying, hey, we're going to even out the peaks and valleys just so both parties feel good about it. That's it. It's not a slippage. It's just saying we're gonna average. If they don't want to average and just do the spot price, okay. And by the way, I always look at my net worth over 30 days. If I look at it on one given day, it's always high or low. In one 15-minute increment. So I try and look at my net worth of what it was over the past 30 days. That's all I'm saying. Anyway, I'll go back on mute.
Can you imagine looking and trying to understand Bitcoin for the first time? Can you imagine? Can you imagine trying to understand Bitcoin for the first time today? Oh my God. People have so much room to we're going higher. We are going way higher, because some people haven't even scratched the surface. Meanwhile, we're over here talking about 30-day trailing average exchange rates in a Bretton Woods 2.0. Right? Like, where are we right now? Right? This is crazy. Yeah, man, a lot of people have a long way to go. I feel bad for them a little bit, but not really.
And by the way, I didn't bring up Bretton Woods 2.0. Somebody else in the comments brought it. I'm not the only person that knows. And I didn't dream up Bretton Woods 2.0. That doesn't exist. And so the person that said that, they should reach out to me, make sure that I follow them. But that's the thinking. What is that possible to do that now? Right? And look, folks, just because I'm older, I just remember this theory, and that's what my background is in. But
it's also in this book. It's also in Broken Money. You can learn all about it. It's like, this book is so good. If you do not have it and you want to learn like monetary history, like US history, pick up this book.
Right.
I make $0 off of this. Like this is read the book.
Yeah. By the way, Tim's not on the call, but this is really funny. Digress for a second. We were at the Bitcoin conference in Miami in 2020, and we're in the back row. And I turn around, and Lynn Alden's sitting right there, because she's a regular person, I guess, right? And I turn around and I see her, and I go, "Are you Lynn Alden?" And she's like, and she was very modest. She's like, "Yes, I am." And I'm like, "Oh my God, I'm so happy to meet you. You're like so famous. Like everybody is like thinks you're so awesome." And she like started blushing, and I go, "Tim," I go, "You know who this is?" He's like, "No." And he's like, this is Lynn Alden. She's like world famous. And like she has like this massive following on Twitter. And then I recounted about her, and she's like, she didn't know what to say. And then she said, and so she was very nice to me and cordial. And I said, I go, "You're up on stage next." And she's like, "Yeah." I go, "Why are you talking to me? Go up, walk up stage and go talk to them." And then we went to the second row to watch her. But when you meet these people, you find out that they're real. And anyway, I don't want to go too much on a digression, but look, folks, I'm going to drop off of this. This call is awesome. I'll continue joining these. I read all these comments. Oh my God, the comment. And then she said, "Why are you wearing a helmet?" Yeah, so I do not wear the helmet in public. But
that'd be so funny though.
I might have to, but anyway, folks, look, and I say this, I will be at MSTR World. I'm looking forward to meeting everybody there. And if there's any other events that come up before that, I'd happy to meet folks at the meetups. So take care, folks.
Thanks, Grain. Appreciate it. Thanks for joining.
Bye.
Cool. Nithu, haven't heard much from you. Any thoughts on all of this? It could be anything. Bears today. It could be, Bretton Woods currency, 100K. Hopefully you were not selling covered calls. I mean, we're all. I think we're all.
Oh yeah, I had to. I got no job, so I had to do it.
Yeah, that's right.
I'm like, all right, the mortgage is coming up. I had to sell some. So, dangling that carrot out there, probably just tempted the market to give me max pain.
We appreciate your sacrifice.
Yeah,
doesn't go unnoticed.
But I kind of had to in my position. I had I actually had more leveraged long call exposure than actual shares. So for me, it just didn't make sense. Like if this is my only income, to put that much leverage, it just didn't make any sense. So, I sold a bunch of long calls and some covered calls and just bought shares with it, just straight shares, traded that leverage for shares.
The good stuff.
That's basically it. Yeah, exactly. So I'm still long. It's just less irresponsibly long.
Yeah. In thinking about what this trade looks like, 2, 3, 4, 5, 6 years from now is a really interesting thought experiment. And I'm sure you're thinking about it quite a bit, especially being retired, thinking about if this is your income, like what does this look like? What does this model out? Like, how does this model out? And I think somebody posted about it on Twitter, and I think I retweeted it. I mean, the premiums on these call options are so high. There's so much volatility in the stock, and the premiums are so high. The income that you can generate if you hold spot shares is massive for a very small, like a very small portion of your portfolio, right? And
Yeah.
you don't have to share what you're doing, but I mean, let's just say you held 5,000 shares. You can put 500 at risk and probably generate enough income to pay for your current job, right? Like,
for sure.
And that's an interesting cost benefit analysis, and I'm running it myself, right? Where I'm starting to see this is becoming a no-brainer, where positions make more sense to sell covered calls than work in my existing job. It's like it's an interesting phenomenon when you see that start to play out, and then you start to think about the game theory of that phenomenon itself. If there's more benefit of holding the shares than selling the shares, because the premium that I could generate by selling the call options is so great, then it's like I want to protect this little, pile of shares forever, because I'm gonna earn yield off of this thing for a long time, and there's no other better opportunity to in the market, right? Like if you go buy Sony shares or Apple shares or whatever it may be, with the same dollars, you're not generating the same premium for putting your money at risk in those positions. So it's an interesting phenomenon, and I think it's only going to get crazier as they continue to acquire more Bitcoin and the price of the market cap continues to fly. If they get included in the queues, credit quality goes up. All of a sudden, we're looking at crazy potential numbers really quick.
Yeah, and I suspect Ivy rank is going to jump up close to 100 again tomorrow. So yeah, I'm going to be adding a couple more covered calls tomorrow, and then and maybe potentially taking some more profits on the leverage again, because I need to my general ratio in the past was like no more than 10 or 20% in leaps. That was like quote unquote safe portfolio in my opinion. And now I'm like 60% leaps.
Yeah.
And that's just insane for me. Like if I had straight shares, I can ride MicroStrategy. I think it's going to 1,000, but I can ride it down to 250 before it goes back up to 1,000. But having that much leverage, riding it down to 250 would be kind of brutal. So
yeah,
I just need to rebalance. That's my thing right now. Just got to rebalance and make it less leveraged.
Yeah. Adrian, you got to drop?
Yeah, I actually have to eat something at some point here.
Yeah, go eat, man. Take it easy. Any final thoughts you want to share?
Besides the fact that Q4 is going to end on a banger note and Q1 2025 might go even higher, nothing. I'll continue to try to find the opposite ends of the outcomes, not because I'm a bear, but just because I like to play the odds and make sure I understand both sides. Some people hate it, some people like it, but if you don't like it, suck a dick.
Yeah, protect your investment, man. # True North bear sighting. TN bear sighting.
Pretty much, yeah. No, this is going to be great. This is fantastic. Today was great. We crossed 100K for the first time. I think that the future is bright for everyone here.
Absolutely. Thanks for joining, Adrian. We'll catch you
later.
So somebody asked this question: how do you protect the shares if they get called away? And I think this is an interesting question. And really, you don't, but you sell your shares at the strike price of the option that you sold. So let's just say MicroStrategy's trading at $445, and you sell a covered call for, let's just say you sold one covered call position. So there's 100 shares at a price of $750. If the price of the stock goes to $750, somebody is paying you $750 for 100 shares of MicroStrategy stock. So you're benefiting from the increased price action. So not only do you get the premium up front when you sold the covered call, but somebody's also buying those 100 shares from you at $750. And then if you have more shares in the rest of your portfolio, the rest of your portfolio is now worth $750 per share. So it's like if you were planning on taking any money off the table, running a covered call strategy may be the most efficient way to do it. If you wanted to, sell at the money covered calls or like slightly out of the money covered calls, a strategy like that may make a lot of sense. Again, none of this is financial advice, but running the math is a really interesting exercise in how it operates and how it works. It's not like your shares get called away for $0. You're selling them to somebody at the strike price.
But I want to be clear about the actual answer to Seth's question is you can't. There's no actual way to protect the shares
unless you close it.
If you sell the covered call, you're putting them at risk. the other person can exercise those, call options at any time. They don't even have to wait till expiration. So there's no way to absolutely protect them. I mean, even if it's only a 10% chance that it'll go out of the go in the money, I mean, you run that bet 10 times and you're going to get burned at least once. So you just have to be prepared to either exit that position or pay good money to roll it. But the way to calculate it, I mean, if you're just determined to do it and you want to have enough capital to be able to pay to roll it, you kind of have to imagine. So if you're selling the 750 and you think it could go to 1,000, then there's, $250 a share, times 100. So 25 grand that you would have to pony up. And at $1,000 a share, you'd need 25 shares. So you kind of have to imagine, well, that's probably right up your alley, Jeff, because that's kind of like insurance. Like, what's the worst case scenario that I need to plan for and have, cash or shares in reserve to be able to sell at the new price? And you just basically have to guess. There's no way to absolutely make sure that it happens. It's a complete guessing game. And if you think it's going to 1,500 a share, now you need $75,000. You'd need 75 shares uncovered to kind of insure every 100 shares. So you got to think about like that, but you're still taking a chance.
There's so many strategies. You can structure this in 10 million different ways, in 10 million different things. I mean, there's probably 100 plus books out there. Go follow Neethu if you want to learn about. He's got, how many videos do you have now, Neethu? 200.
Tomorrow's going to be 300.
300 tomorrow. Oh my God! Congratulations.
Thank you.
We got 100K and 300 videos from Neethu. Wow, Mason, go ahead. You want to jump in there?
Yeah. So Dan had this. He just replied to this comment recently, and he said, "It's been very difficult for me to come to terms with the new reality that decision making has become more important to my net worth than hard work."
It's an interesting comment. Yeah,
because
wow.
I think we're brought up
it's
in
a digital
society,
reality.
right? Yeah. We're brought up in a society that rewards hard work, especially as men. Like being masculine is definitely like adjacent to working hard, providing. And I think a lot of us and a lot of people in the irresponsibly long community are increasingly in this position where the decisions that they're making right now and throughout the next 10 years set up the rest of their lives. So I think the point here is, or at least what this makes me think of, is that I feel so lucky to have this community to bounce ideas and keep a level head. You want to be hearing out what other people have to say, because it's not an individual thing, or it doesn't have to be an individual thing. And I think that takes some of the stress off of it.
Absolutely.
It's hard to say it any better than that.
Yeah.
I mean, that was great, Mason. And I think people are, one of the reasons why I think it's great that we've now got this community going, where we've got all the people on the call with different perspectives on how to utilize this, because this has been the hard work, right? Up until this point, it's not easy to be in the right place at the right time, right? It's not always just luck. Sometimes you're finding it. You got to put in the time to find those opportunities. They don't just stumble on you. None of us got here because we just guessed, right? We put in a lot of work, and yeah, now you do. Now it does become decision making. And a lot of people, I think, are going to benefit from these types of conversations pretty soon, because there is a reality that a lot of people now that are getting the freedom to potentially exit corporate jobs and start finding themselves in a position where they now have the assets that can support their life. That's a big mental shift. I mean, losing your income, just even leaving a job, the first time that paycheck doesn't come is weird. I mean, it's a weird feeling when all of a sudden it's not just coming into your bank account like it normally does, every Friday, every 2 weeks or whatever it is. But the things like covered calls that Neethu talks about, like those are things that you really need to study to be able to utilize. And then each week or each month or however often you're selling these, you are making the right decisions. That's what you're focused on, is how do I make sure I'm making the right decisions to, one, protect the asset base that supports my life, and two, take the right risk reward where if it goes against me, it's an outcome I can live with. And that's an important part of this. Like for me on covered calls, like I'll still do it once in a while, but because I've studied MicroStrategy for so long now, and you start to understand like the gamma implications of it and how these moves are going to get extended one direction or another, like I might only do it once a quarter, and that might be all I need. Because when you start to see that this thing can really spike in the IV, like, one of the trades I did a week or whenever it ran up into the 500s, I saw the IV on things for February. I was selling calls in February for 800 and I don't remember what the
probably
was,
bought 'em.
880s maybe, something like that. But it was a $105 premium, which was massive premium, right? And because we were in one of those really extended peaks, you can take the bet that that peak is going to soften at least for a little bit, and that's going to crush that IV, and you'll be able to get out of those positions rather quickly and collect the premium. So within 4 days, I sold them at 105. I could buy them back at 33, right? In 4 days. That was all I had to hold that for. And that's a big gain, right? I mean, depending on how many shares you're doing that with, that's a very big gain. So for people that are watching this, it's good to study what's going on. Watch the options before you get into selling them. Watch how they behave during these periods in time. And then based on your own cash flow needs, if you're ultimately using this for cash flow, figure out how to structure that. Because if you can do it in a way where you might only need that capital injection once a quarter, and then you can run on that for until the next quarter, like when you look at the peaks and troughs that this thing gets, and they're going to keep coming, right? It's never going to be a straight up all the time, no matter how bad we all want it to be. Once you start to understand what you own and how what you own behaves, now you can start utilizing it in the best way. And sometimes that best way is during a mania phase. You might be selling covered calls where if you did lose those shares, you're looking at a peak and then you're selling 100% beyond that peak. So your worst case of losing those shares means you got another 100% from what was already a huge run, plus you kept the premium. So that's the risk reward dynamic you need to look at. And if you tune it in right, it can be really, really impactful. And you might not actually have to spend all that time in a risk position where your shares are actually at risk of getting called away.
Yeah, if I get some of these called away, I mean, I've got some at the 700 strike and some at the 800 strike. So don't cry any tears.
You're like,
over
great.
me. If I double up, it's fine.
Well, and for people that are later in their career, like if you're in your 60s or 70s or late 50s or whatever, you might be at that point in your life where you're looking to de-risk concentration anyways, right? I mean, all of us, we're heavily into MicroStrategy. We love it. We want it to go up forever, right? We're going to hold these things forever. But if you're at that stage of life where you're willing to start losing a few shares, right? You keep a major core position, but if you're willing, like if every 3 quarters I lost 100 shares, would that really ruin my life? No, right? Probably not. So people can start looking at that as they get further out, and that adjusts in that risk profile of how much premium you're going to collect versus how much reward or how much risk you're going to take of losing your shares. So you've got to evaluate the point you're at as well in your own investing and savings career, where you start to make those decisions. Right now, I don't want to lose the shares. So I'm looking for the opportunities I've got to sell them 100% out of the money and collect really good premiums for that level of risk. I can live with that outcome, right? And I'm not going to do it on all the shares.
Yeah.
But if I was later in life and I'm retiring and I've got a strong base and I'm just looking to, de-risk concentration, then, I might start adjusting that and collecting higher premiums if I need the cash flow more than I need the upside of the stock.
It sounds like you're running this strategy for somebody that is older than you.
Sometimes you try to help the people around you guys. That's what you should do. If you got people you care about and you learn something, use that knowledge to help them, right? That's how it should be.
Ben is speaking from experience. I
And
think
I
go ahead.
should just clarify too. Like, I think that selling covered calls will underperform just straight buy and hold over the next year. So just don't think that it's free money. Like, some people are like, "Oh, this just
I got
seems like
wrecked by covered
printing free
calls.
money." Like,
No.
no, it's not printing free freaking money.
It's a risk
Yeah,
position. It's a risk position.
It's an
Adrian
upside
was
risk
asking me
position.
earlier, and I said, I think the next 3 months it's a fool's errand, right? Like,
Yeah.
you don't know when you're going to get your face torn out. Like, people probably weren't thinking we were spiking through 100,000 tonight. There's going to be a lot of people upset on Friday if this holds, right? And so you look at the catalysts, right? That's what I like to track a lot, is when are these catalysts coming? And when you get a period of concentrated catalysts that can build on each other, that's a dangerous time to sell covered calls anywhere near the money, right? You got to be so far out on there to be safe, and you better be keeping time in your favor, right? Those things better be short term.
Man, you can't see these very well, but yeah, I mean, we've got the catalyst on the horizon. Maybe I'll make it full screen just to like look at it. That's not better either. And maybe I'll zoom.
It's loading.
Yeah. Anyway, and we've got a lot of catalysts on the horizon, right? So we've got Bitcoin menace coming up within the next couple of days. This Microsoft shareholder vote. Apparently, Saylor was asked to come back for another presentation. I wonder if he'll get more than 3 minutes.
That was fake.
That was fake.
Yeah, that was fake.
Bummer. Interesting. Well, I'm glad we got you on the call. Thanks, Mason.
Yeah.
Good research. We've got QQQ potential inclusion announcement next Friday, which would be, I mean, pretty crazy because that would increase the credit quality instantly. And I would assume there's significant liquidity that would come with that. And any potential future convertible bond offering, given that the leverage on the MicroStrategy balance sheet has been improved, right? We could see another $3 billion, $4 billion buy from MicroStrategy above 100,000, which could put us to 120, right? Or 110, 115, 120. Who knows where this goes? We've got another December Fed meeting. We might see interest rates come down again. We've got the actual reconstitution, QQQ reconstitution, December 20th. We've got Christmas and New Year's, probably a 100K party by Saylor somewhere in between there. The January 17th historic open interest expiration. Also, there's, and Ben, you might have some more perspective on this, but I want to bring up the blackout periods. Blackout periods are a thing. If you have an open ATM offering, there is a required blackout period where you cannot sell shares before, like from when you, I think when you close the quarter to when you release your earnings. Is that correct?
Yeah,
like,
there's technically no like firm rule for the time that you have to sit it out. Usually companies will go for, like 2 weeks before, but keep in mind with QQQ, if MicroStrategy finds out before the public does, so like they might know, maybe they know now that they're getting in.
Yeah.
That's non-public information. And if they start hitting the ATM and essentially trading on that information, that's a big problem. So watch the price of MicroStrategy. I'm kind of keeping an eye on what the share price does to see if it seems like they're staying out of the market as kind of an indicator as to whether or not they might be getting into the QQQ, right? It's not a for sure, but that would be one of those other types of events you could have that would prevent you from using the ATM. And I'm also batting around on my thinking about how, if I'm Saylor, how am I going to treat QQQ inclusion, right? Originally, I was of the mindset that thought, well, now I've got a forced buyer in the market. I'm going to use that to hammer this ATM and collect their capital while they're a buyer at any price. That was what I was originally thinking. I'm starting to change that a little bit because I think that type of buying pressure could be so impactful to the upside of the shares that he could get an opportunity for the mNAV to expand pretty significantly. And if MicroStrategy shares outperform the performance of Bitcoin during that period in a significant way, then waiting to hit the ATM until you're at that expanded valuation would be more accretive to your shareholders than collecting all that ATM capital on the run up and dulling the rise. So if you're trying to do this strategically, I'm starting to lean more into the camp where maybe if I got to be off the ATM for a week or two here before QQQ inclusion, if they get it, then why not potentially let that run for a while, get those forced buyers in, and get back on the ATM after December 20th when the share price, I mean, look what AppLovin did, right? I mean, that share price can go crazy during that time period. So there's a math equation that I'm sure they're working out over there going, what makes it the most accretive to use, right? It's going to be the most accretive if they let it expand again, right? We've kind of dulled the mNAV multiple right now. So you're getting to the point where, yeah, it's still accretive, obviously, but less so than if they let it expand back up and get up to, above 3 again and then start using it. So I'm starting to change my tune a little bit on what I think is going to happen, but obviously, I don't know. I'm making this up as I go, but it seems reasonable to me that if he's got that belief that MicroStrategy can outpace Bitcoin's rise from here, then he's going to be tapping the ATM at a much more accretive value than he would if he starts doing it early on when those flows are coming in. So something to think about.
And volatility is the product.
Yeah.
And volatility is the product. So how do you capture the most volatility? You could potentially let it breathe or not use the ATM in that scenario. It would be the most volatile to the upside. And it could establish a new like mNAV floor almost. Like let's say it hits an mNAV of 8. At that point, it's good for 8. It can hit 8 again. If it goes to 8, it can hit 8 again. It may come back down and breathe, kind of do this up and down thing, but that it's hit 8 previously. It's possible that 8 could be hit again.
But he could double up too, right? So he could wait on this like I was kind of expecting a convert this week. I just thought that going into December, he might start running it. But what if he holds off and he stays off the ATM? He lets the share price expand. You let all this buying pressure come into the market, run that share price up. Then you do a convert. Then you start hitting the ATM, right?
Right.
So now that convert's going to be, 55% out of the money from wherever the price expands to. That's pretty accretive.
Right.
And then you start using the ATM
That's
later.
even more accretive.
Still very accretive, right? So there's a real chance here to get one block of really accretive transactions done that I got to imagine they're focusing on that, because it seems to make, the more I've batted it around, it seems to make a lot of sense to allow that to happen, right? So maybe there's no rush to get another 3 billion out the door in converts, because if they're planning to let this thing breathe for a while, and if Bitcoin, you've got enough companies coming in now that are putting buy pressure in the spot market, because a lot more are coming out doing these convertible bonds. So they might be able to push this thing. If these books get thin and stay thin for a while, now that we're through 100, they might be able to just let that run on its own. And then as soon as that slows down, their share price is a lot higher. Now they show up to the market with a new offering, 0%, 55% out of the money, maybe from $800 a share, right? I don't know. I'm making that number up, but that would be a hugely accretive transaction coming into the end of the year,
right,
to really boost that Bitcoin per share and that yield metric. So it seems to make sense to me, but again, I don't know, right? These are just late night thoughts.
The coolest part about this whole brain concept is that there is so much asymmetric information. Nobody knows. Nobody knows when the ATM is being used. Everybody's like, they're hitting the ATM. Are they hitting the ATM? They're hitting the ATM. It's like everybody on Twitter is they're asking like somebody's going to give them the answer. It's like nobody knows the answer on purpose. Like, it is by design that you don't know the answer and you don't know what he's doing. Like asymmetric information is valuable here. But Ben, I think it's a really interesting component you bring up. The converts are more accretive than the ATM because they are sold out of the money. And to your point, if you let the stock run, let's just say it goes to 800 or 1,000, and you're selling them 50% out of the money at 1,500, that's far more accretive than if you were to slam the ATM, keep the stock price at 750 and sell them 50% out of the money for 1100.
Yeah. And that's kind of what I'd look at to say maybe this
Oh,
run is
wow.
overextended now, because that would be what I would see as the period that's going to pull it back, right? Because you want to do that convert at the peak, as close to the peak as you can get it. So you wouldn't try to slow it down organically on your own. You'd let it run. You'd try to hit it at the peak, and that would kind of be the peak, because now that sales pressure is going to come into the market from all the delta hedgers coming in. And you're probably going to get hit pieces that are going to show up because we'll be overextended again, right? You'll get all the normal stuff that's going to keep happening.
It's so funny.
And even then, their floor is going to be reset. So then you can use the ATM after that. So we'll see.
The fact that we've already gotten all of the short thesis now, if they come out again with a short thesis at some point in the future, you're like, okay, cool, bro. Right? Like we've already plowed through, like we're now double where we were, or what, like Carousel, right? What are we, 3 times where the price we were when Carousel came out with the short report? It's like,
Yeah.
okay, like where do we go now? What now, bro? I'm still long, and now I'm even more long because the premiums I could generate on call options, I could hold this position for the rest of my life and like never have to work again. It's just like it's totally crazy.
And I'm getting a ton of DMs asking for price targets, and guys, they're never coming. I'm not giving them to you, because it's a zero-sum game for people on the
There's no
internet
win.
to give price predictions. Because
Yeah.
if I go and say prices that, like, I have my own price predictions, but our intent here is to give everyone the information that they can use to make a decision for themselves, right? Investing is an individual sport. Research is a team sport. That's what we're trying to do here. And so I'm not going to put out price predictions, because, the minute you get one wrong, everyone's up in arms about it. So they're not coming from me. You'll get them from lots of people. They're not coming from me. So, well, you don't need to send me DMs about it. I'm not giving them out.
When
I usually
Quant
just say ask Ben.
Ben.
And I say ask Jeff. I say that's what Jeff does more than me. So we'll just keep passing them around until they land at Mason.
I do the market cap. I think the market cap is interesting to look at. I mean, what the price is, I don't know, because the shares outstanding, who knows where it goes. But it's funny, and I brought this up in past shows, but our Quant Bros, Ryan and I's Quant Bros episode 1 video is, can MicroStrategy hit $10,000? People thought we were insane. That $10,000 is split,
which is now 1,000.
Split adjusted at 1,000. And I mean, we're halfway there. People thought we were crazy. So split adjusted, when we made that video, the price of MicroStrategy was $40. So we're on the way. And I had to talk Ryan off the ledge of making me title the episode, "Can MicroStrategy hit $100,000 a share?"
I was like, easy.
You're like, dude, you're too crazy.
Like, easy.
I'm like, that's $3 trillion. Like, they're going to the top. But anyway, this is just a funny story.
I was thinking about that today in summer of 2023. I was talking to I was working construction at the time, and I was just talking to one of my coworkers just about stocks, and he didn't know anything, but I was like, yeah, I'm interested in the stock right now. I think it can go to 10,000 a share, and we're almost there. It's mind blowing.
Yeah, the nominal bias really freaks people out, because they don't get it. Like, they don't get the math that, like, not all stocks have the same number of shares outstanding. Like, what? Like, because Apple's trading at 100 and MicroStrategy is trading at 400, they're like, it's overvalued. Like, you're an idiot. You don't know the math. But anyway, flu game. Ben can feel the pulse in his eyeballs. You need to check out. Take it easy, man. Be well.
I got to run, guys. Thanks.
Yeah.
Appreciate it.
Be well. Awesome. Well, I got, I don't know, 15 more minutes. I can hang out. Should we answer questions? What do we think? Should we talk?
Yeah, I saw some people on Twitter today wanted us to do a little Q&A. So
yeah, I like it. One of the questions that came up a long time ago, I have no idea. Actually, this is an announcement to people that are in the chat. If you guys have questions, please put them in the chat, and maybe we'll kind of cruise through them. But one of the questions is that was from earlier: is, can MicroStrategy have too much Bitcoin? And I think that's an interesting thought experiment. I think the answer is a pretty quick no. We're looking at maybe them hitting 2% of the total global supply here shortly, probably within the next month or two. And the possibility of them getting to 5% is pretty difficult if we think that Strategic Bitcoin Reserve and all of these other countries are going to be adopting Bitcoin at some point in the near future. So it's I don't know. What do you guys think?
How can you have too much Bitcoin?
Right. Go ahead, Ryan.
I just don't think it matters. And this is one of those things that comes up from those common bear cases. And by the way, that's why Jeff wanted to run through all the gummy bears, koalas, whatever. Bears, oh my. Is because this is like one of those like common themes that would just keep coming up. Be like, oh, this is bad for Bitcoin. That Sailor like controls too much. Or it's like, that just shows a fundamental like lack of understanding of Bitcoin, right? Is that no one entity can like change the code, can make more of them, can skew the odds in their favor. I mean, would it be ideal if MicroStrategy had half the Bitcoin supply? No, but they're never going to get there. Maybe 1 million coins. I mean, and that might be stretching it because there's so many unknowns with like nation states and other companies and all this other stuff. So that my short answer is like it's not a problem, and they're not going to have like too much. And again, too much is such a subjective term, right? So it's messy, it's complicated, but I don't think it's an issue for either MicroStrategy or for Bitcoin.
Yeah, it's all number go up technology. Okay, let's go to the next one, which I think is interesting. Can you sell convertible bonds at a negative coupon? I don't know the exact answer to this, but I think it's theoretically possible. Any bond can have a technical negative coupon. It kind of depends. It's a pricing mechanism. So, right, like how the bonds are currently priced. So the bonds have 0 coupons. Let's just say the 0 coupons over here, but they have a 55% option premium. If the bond had a higher coupon, it may have a higher option premium because they're carrying a coupon payment with it, right? MicroStrategy has got to pay a coupon payment. Now, if you go negative, the call option strike price may be lower. So it kind of depends on the management of the cash flow. In my mind, I think it's theoretically possible, and maybe we'll see that in 2025. Interesting question. Let's see here. We've got some others. What do you say? Can you speak more about covered call strategies for 2026? Maybe Neitha, you want to take that one?
I'm not exactly sure if they mean like selling covered calls all the way out to 2026 expiration dates. I would say
probably starting in 20. If they're thinking like cycle top, that's
that makes more sense.
That's my guess.
Yeah, that's probably if we're assuming that the bear market is going to take over. Then if that's your basic assumption, and if that ends up being correct, then that would probably be perfect timing. And that's probably my plan as well. And just for this reason, if the bear market doesn't happen, then I lose some upside. But if it does happen, I've protected myself. So that's kind of where I'm just leaning towards doing it at the end of 2025.
I think this is an interesting concept of like, it just depends on the design of how you want to design your life, right? Like if you're sitting on $25 million, like, and you don't have a house and, you know, like you need to improve your life for your family. Who cares about a covered call strategy? Like sell some shares.
Yeah, you can just peel off some shares.
Some shares and like improve your life. And it's like, it just kind of depends on the design of your life. Like if you're going to work for income, and maybe make the world, upgrade the world, right? Like if you're going to go upgrade the world and you go work for income, maybe that makes sense. Or maybe you need it to supplement your income. It all depends on the design of your life. And there's 100 million ways to do that. You just kind of have to think through like what is important for you and your family and whatever you have going on at that time. Like for Mason here, he's like, I don't even want to risk my shares at all. Like my working horizon is 50 years. I'm gonna go grind and just like start stacking more Bitcoin and MicroStrategy shares. And like for me, that might be different. Like I might be willing to sell some covered calls to offset a couple years of working income or something like that. So all kind of just depends, right? It's like depends on
Yeah,
the price and
they've got like a Bitcoin calculator where you can plug in what you think the Bitcoin returns will be, and what how much you spend a year on your mortgage and food and whatnot, and calculate how much Bitcoin you need to retire, and just retire off that stack, because that it's going to be in 4 years, it's going to be however much higher. And yes, your Bitcoin stack would go down every time you make a purchase, but it's going to go, as long as you're, living within your means, it's going to go up in fiat terms more than you're spending. So you can, once you get that, it's got all a bunch of different assumptions, and you plug them in, and it just lets how many Bitcoin you need to basically never work again. And you can do the same thing with an MSTR stack, right? You don't have to sell covered calls, but I chose to sell covered calls, and I needed like 10 grand for expenses for the next month. I'm not going to have a paycheck, but I could have just peeled off 25 shares. Is that 10 grand at 400 a share?
yeah.
So you can just do it anyway. There's lots of different ways to do it, but
Yep. Agreed. Going to another one. Do you worry about the custody of MSTR stack? This one comes up a lot, and the answer, my opinion, is absolutely not. Right? Like they are with institutionally large, financially important custody providers. Coinbase, Fidelity, NYDIG. You can go read the 10Q. They're in there. You don't want a corporation holding 30-40 billion dollars of Bitcoin in cold storage, in keys, in a safe in Virginia, or like in the middle of nowhere. Like nobody wants that. No shareholder wants that. Like I want somebody else controlling this, like a banking like institution. This is why the bank custody SAB 121 is so important, because you can diversify your custody holdings over multiple bank providers in the future. And so how I imagine this probably looking is they have 10 different custody providers that hold their stack over 10 different systemically large institutions that are all, fiat, systemically important, something like that. Anybody else? Go ahead, Ryan.
This is like that awkward middle ground between like the perceived like values and principles, let's call them, of like Bitcoiners who are like cold storage, blah, 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 all this stuff. But it's like Saylor even talked about this once candidly, where it's like, if I had like all the Bitcoin on a cold storage in my office, that would create key man risk. He might get on a spaceship with Elon, go to Mars or something, or all these other like circumstances where then like he could like access it. It's like, and this is where that paranoid crypto anarchist comment with the conversation he did at his DC apartment with the I think Australian New Zealander Maddie reporter who traveled to see him. It's like not everything else has to lose in order for Bitcoin and MicroStrategy to win. And there is just like a clear and ever-present key man risk that would be presented if it was all in like Saylor's office. But again, it's that weird middle ground between the perceived like principles and values of Bitcoiners and how this actually works at $100 billion market cap, publicly traded company,
Right. Okay, I've got another one. Here we go. Ryan's like 0. I can't even bench press a 1.
I got way weaker since I left the army. I don't want to talk about it.
You don't want to talk about it. How about 10 koala bears? I could bench press 10 koala bears. That was funny. Okay, what else do we have on here? Somebody said FASB in January, I believe. So FASB fair value accounting, any company could have adopted in 2024. MicroStrategy's indicated in the Q2 or the Q3 earnings call, Mason, correct me if I'm wrong, that they will adopt in Q1 of 2025. Yeah.
Yeah. Q1 2025. I think it was it? I think it was the last earning call. Q3.
Was it Q3? Yeah. It was Andrew King.
Yeah. Before that, we didn't have any clarity about when they were going to do it. So it was pure speculation at that point. And now we know Q1 2025.
Again, FASB fair value accounting is taking the Bitcoin held on balance sheet will be marked at fair value. Right now, the Bitcoin held on balance sheet is marked as an intangible, long-lived asset value accounting. So it's treated the same way as a patent is treated. So they have to mark the Bitcoin down to the lowest price during the period of the quarter. So that's why the earnings for MicroStrategy has been negative over the last 4 years as they've adopted the Bitcoin strategy, because they've had to comply with dated accounting principles. So this is a really big deal. It's the biggest deal for MicroStrategy. And in my opinion, this is like the gun going off at the starting line, where everybody in traditional finance who looks at MicroStrategy stock, they go look at the earnings and they see that they're negative and they say, I'm turned off on this stock. I don't want to own it. But they don't know that FASB fair value accounting exists. They just don't get it. And they're not willing to ask the question is, why are their earnings negative? And then the learning stops there. So
that's actually going to be like late April, early May, right?
Probably
Q1.
May. Yeah, probably May. So March 30th and around MicroStrategy World, which I think is first week of May. Yeah. Okay. What else we got here? I think that's probably good for right now. We're about 9:30. All right. Let's see what the price of MicroStrategy is before we leave on Robinhood. We got Bitcoin at $103,431. Price of MicroStrategy $450.63. So, what a day! What a day, Ryan. You want to add something? Closing thoughts?
Before I forget, these are my closing thoughts. Before I forget, can you email me that Excel file? I want to run the change and change over change numbers on the data as you have it.
Yeah, absolutely. I'll send it over. Cool. Thank you everybody for joining. Yeah, Mason, go ahead, jump in there.
No, I just want to say anyone who's held through last cycle or the cycle before, like I know 100K is kind of arbitrary number, psychological, but I think it is a big deal, especially if you experience that 69 to 16. That's really painful, and I think it hardens you. It gets you ready for volatility. MicroStrategy is all about the volatility, and if you're new here, if you haven't experienced this before, get ready for some crazy volatility. This is only going to get crazier from here. This is not the flat and easy pathway. This is peaks and valleys, and just mentally prepare for it. I saw a lot of people this past week who were really maybe emotional or upset because they maybe bought at the top, but have a longer time frame, right? This is long term. And that's where your mind should be at this point. That's my opinion.
Yeah, there was a guy that he's not a Bitcoiner, doesn't understand it, thinks it's a scam, whatever, but he FOMO'd into MSTR, and I saw him posting like down $6,000, can't wait to break even. I hope it goes up so I can get out of the trade and break even. And I'm like, what time frame are you freaking thinking about here? Like 2 weeks and you're just ready to break even. You just hope it could get back to even so you can get back out. You can't get into this trade if you don't understand Bitcoin. It's just impossible.
A small anecdote. I had talked to some family last summer, 2023. It was July 14th. I will never forget the date. They convinced them to purchase Leaps. This was like a local peak in 2023. I think the price hit like $456 or something like that. And it was like
July.
It was July 14th. It was July 14th. And I convinced them to buy out of the money leaps for January 2025, highest strike price possible. And then over the next 4 months, it just like went continuously down. And it was one of these things. It's like, oh my God, I just got my like close family to just buy these like out of the money long-term leaps. And I called him in September. I called him on September 29th. We'll never forget this date either. And I said, I think you need to buy more. I think you need to buy more. I was like, you remember those leaves that we bought in July? Yeah, now you could double them for half the price. So I think you should buy more. And sure enough, like a week later, the price went up to like it almost went back to 400. And so the point being is like sentiment is important here. Volatility is important. Volatility is the product. We're going to see a lot of volatility, and everybody that's been here has sat through significant volatility. I've seen my original investment drop in half, like multiple times. So it's a bit of a wild ride.
Yeah, 2 days after I put in my 2 weeks notice, my account dropped by a third. I'm like, well, can I unquit? I'm like, is it too late? Did you hire my position yet? Like, can I just stick on maybe a couple more months? Nah, I was fine. I had calculated. Yeah, I felt like I could ride it down to like 250 and still be good. You know?
Yeah. Yeah.
I had my target number, and when I showed it to my wife, I was like, this is the number. And she's like, no, double that. And I was like, God damn it.
Yeah. A lot of those,
a couple more months.
A lot of those scenarios, you just kind of like constantly running through scenario testing. I know that I'm doing that all the time, so it's exhausting. My wife is like, I'm so tired. It's so funny. Anyway,
yeah, and my wife won't quit her part-time job. I'm like, are you serious? Like, I'm quitting my full-time job, and she's just holding on to it. It's like, well, maybe I'll take in a couple extra hours and we'll get health insurance. I'm like, oh my God.
She's upgrading the world. It's okay.
Yeah, exactly. There you go.
Ryan, you got any closing thoughts?
No, just thanks everyone for caring about what we even have to say. Cause like Jeff always says, like we would do this if it was just us anyway. But it's cool. It's cool to just like kind of Roaring Kitty style, open source the research and just get feedback from the group. We'll do more Q&A. I enjoyed that a lot. Let's see what other people are thinking. But let's then ask them a question. What do you think about this? It's fun. We're having fun. Wearing sunglasses. We're having fun. Okay.
Yeah, absolutely. Neithu, any final comments?
Nope.
Cool. All right, that's all. That's all we've got. I've got final followers on Restream, or the people that watch this. I've got 23,197. So that's an arena. We've got an arena of people that have watched this, which is crazy. So thank you very much to everybody that's followed along and stayed here for 2.5 hours. I appreciate the time. And we've got a really exciting future. Bitcoin's up above $100,000. I think there's blue sky straight ahead. Next couple of weeks could be really interesting. We'll be back next week, probably on Wednesday. Maybe we'll do a True North on Monday, a shortened one. But we'll be back next Wednesday. Please follow the Irresponsibly Long MicroStrategy on X. There is a Discord. It's called the MSTR Den. That's available. You'll be able to find it. You go look for it. Other than that, we'll be back next week and carry on. Let's go higher.
See ya.